about 80% of where it was last year, still down 20%, but that's dramatically above the rest of the world. Can we view this as a dramatic positive that basically this edifies this idea of foreign investors putting their money into China, or is this propaganda hiding the pain that you're talking about in other areas of the region?
Well, I think the numbers are propaganda, but I think the images you're seeing in terms of travel are real. I mean, there is a real recovery going on in China right now. It's better than what you're seeing around the rest of the world because their solution to COVID was so dramatic and so quick. So what you're seeing is not propaganda. You're seeing a recovery. It's just that they can't help themselves. They can't just say, look, we're doing real well, but we're not back to where we want to be. They have to say we are back to our old levels of growth. The street's talking about 5% growth for the third quarter. It's absolute nonsense.
Leland, the aggregate numbers are decent relative to what people expected 9 months ago. As you point out, though, and please build on this, what many people are looking at in the developed world, Europe, the United States, the K-shaped recovery, what you've just described just moments ago was something similar playing out in China. Can you shine a light on that and just describe the differences between what we experience in America and what you see in China beneath the top line?
Yeah, well, the difference is that they got their stuff under control real quick and we didn't. But I think the similarities also stand out in that if you're a connected firm, if you've got a lot of capital, if you're politically connected, you're going to do really well in this. Large firms look at the economic horizon and they see a strong recovery, and that's why they are borrowing. But if you're most of the country, and you're most firms, all SMEs, and you're all over the country outside of the major cities, you're borrowing less, you're spending less, you're earning less, and you're really hesitant about what's happening there. And when you look at our credit data, it becomes very, very clear because outside of large firms, nobody is borrowing more. And pent-up demand across the board, state versus private, every firm size, every kind of firm except large firms is pent-up demand is falling pretty fast. So you've got a lot of firms questioning what's on the horizon, even though you've got these numbers that are looking pretty good.
So, Leland, you said that this isn't the recovery that the Chinese Communist Party is planning. Can you walk us through what they are planning and where you think they need to adjust policy?
Yeah, well, what they planned happened back in March when they looked around. They said, we've got a shutdown economy. What do we want growth to look like at the end of the year? And then we are going to print those numbers. And let's hope that the reality looks as close to that as possible. So this is why in the second quarter, everyone on the street, even the biggest bulls, were sort of scratching their head when China released a 3% year-on-year growth number above 3%. Nobody was seeing that, anecdotally or otherwise. But China needed that in order to be able to hit the growth number it wants at the end of the year. So basically what they're doing is they decided where they're going to be in the fourth quarter. I mean, we could tell you what their growth numbers are going to be in the fourth quarter because they decided them long ago. Now they need to shepherd the economy in a way in which they can plausibly claim that things are that strong.
Meanwhile, we do have the question of the currency, and John raised a question earlier, which was an important one, which is how much will the Chinese leadership manage its currency as it strengthens versus the dollar? And that's really a question as the export-import imbalance deepens in favor of China. Do you see them trying to come in here with some sort of currency intervention if we get a much greater strengthening in the yuan?
Yeah, if it gets too strong. I mean, look, the currency is constantly being intervened on within a certain level. But what the Chinese government would like is relative stress, well, stability first, and then relative strength against the dollar. Everyone talks about the basket. What really matters to them is the dollar. That's what their mechanism is for ensuring stability. So they want a slight upward bias in order to create purchasing power in China. That's their sweet spot. If you see a falling dollar, which surges the yuan, or you see dramatically diverging recoveries where China is doing fantastic and the U.S. falls back and was second wave double-dip recession, then I think that they're going to have enormous pressure to intervene because they want a stronger currency, but they don't want a super strong one. So they're watching this pretty closely.
Leland, great to catch up. Always good to catch up. Leland Miller there of the China Beige Book. Thank you, sir. Headline cross to the Bloomberg, reporting from Verge. The following headline, Tom Keene, Microsoft to allow employees to work from home permanently. The word permanently jumps out there. That coming from Verge, that reporting, that Microsoft is to allow employees to work from home permanently.
Every company, every industry, and John, they've got to revisit this, and it's going to be fascinating to see if there's compensation differentials, if there's sets of people that say, you know, I really don't want to work from home or I can't work from home, fascinating social issue.
Kids?
It's not going to go away.
Are you suggesting that permanently isn't that permanent, Tom?
Don't know.
Is that what you're suggesting?
I think it's all new. I think for everybody involved here, the real estate people, the C-class officers, but most importantly, the people, and you've heard me say this, that the burden of this pandemic on younger parents with little children is profound. I don't know what permanently means.
I know that Lisa's been looking at the Westchester Manhattan commercial real estate spread, or rather residential real estate spread, which seems to be getting a lot of attention this week, Lisa.
Well, basically, Westchester houses are rising to record highs. Meanwhile, Manhattan rents are falling to the lowest since 2013, people fleeing for more space. You do wonder, though, especially if you've got young kids at home, I'm just saying, theoretically, it might be a little distracting if you're working from home. And theoretically, if you don't have... Theoretically, if you don't have a big monitor and water cooler discussions, snacks.
Se activaron los chucheros. Me llamaron. Ya que lo relajó, cuando yo lo prendo no lo apagó. Todos los kitipos que me ponen los puertos en gajo. Prendimos la vuelta en el piso de abajo. Y hasta que la quinta ya le llegó el bajo. Me llamaron antirruido por el bajo. Me llamaron antirruido por el bajo. Me llamaron antirruido por el bajo. Por la bocina arriba con los cajones abajo. Me llamaron antirruido por el bajo. Me llamaron antirruido por el bajo. Me llamaron antirruido por el bajo. Por la bocina arriba con los cajones abajo.
Me llamaron antirruido y yo subí el sonido. A tú el que me tira yo lo dejo en el olvido. Por papá Dios bendecito. Tú el que se topa conmigo lo dejo desconocido. Super bajo, prende el kitipo. La nena lo quiere entonces yo le doy con todo. Dale ratata, fuego con todo. Yo que tú apago esa música que llegaron los pros. Y me llamaron antirruido por el bajo. Me llamaron antirruido por el bajo. Y me llamaron antirruido por el bajo. Con la bocina arriba y los cajones abajo.
Me llamaron antirruido por el bajo. Me llamaron antirruido por el bajo. Me llamaron antirruido por el bajo. Por la bocina arriba con los cajones abajo. Y yo no sé qué es lo que le pasa al vecino. Me dice que ahora le molesta el ruido. Me dice que lo baje, que no le gusta el sonido. Y yo se lo subo porque que te bajo en mí y no sé qué es lo que le pasa al vecino. Me dice que ahora le molesta el ruido. Me dice que lo baje, que no le gusta el sonido. Y yo se lo subo porque que te bajo en mí. Llamaron antirruido por el bajo. Me llamaron antirruido por el bajo. Me llamaron antirruido por el bajo. Por la bocina arriba con los cajones abajo. Me llamaron antirruido por el bajo. Me llamaron antirruido por el bajo. Me llamaron antirruido por el bajo. Por la bocina arriba con los cajones abajo. Me llamaron, 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 me llamaron antirruido por el bajo. Me llamaron, 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 me llamaron antirruido por el bajo.
Es que soy corrupto, yo no respeto horario. Mi vecino no duerme, lo tengo de relajo. Comienzo tarde, termino temprano. Cuando estoy en alta, lo prendo y no lo apago. Y al que no le guste que se vaya pa'l carajo. Lo mío es cuero, música y alcohol. En rumba y calle me apodan el menor. La chanti mirando el flow de Nueva York. Aquí se bebe, se fuma y se gata. Prendemos exótica, nunca jaraca. Yo ando en un sport, no me viste ni la placa. Taca, taca, la gorda y la flaca. Vibran la bocina cuando redo a la machaca.
Me llamaron antirruido por el bajo. Me llamaron antirruido por el bajo. Y me llamaron antirruido por el bajo. Con la bocina arriba y los cajones abajo.
Me llamaron antirruido por el bajo. Me llamaron antirruido por el bajo. Me llamaron antirruido por el bajo. Por la bocina arriba con los cajones abajo.
Oye, adivina quién vino la fuerza. Yo soy Vicini, el Yamaha, el Yamaha-Yeezy, J-Sound. Redo al Rubirosa. Mira,
Billy aparataje.
Yesa.
El combo de los 15.
¿Y qué es lo que dice ese vecino?
Esta gente no quedan a nosotros como los africanos a los japoneses a nivel de tecnología. Y como dice doble A el fiscal, un saludo para todo el mundo.
Explore the trends, investments and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacqua.
We're still in the greatest economic shock in over 50 years.
I don't think the economy is going to be that strong next year, regardless of who wins the election.
We've done a good job of clawing back the vast majority of job losses right now.
The numbers this year don't really tell us as much as we need to know about the future.
The environment of high returns and low volatility of the last 10 years is really behind us.
The Fed has been flattening the curve when history says that what you want is a steeper curve.
One thing that I think almost everyone missed is that an economy adapts.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene, a simulcast on an important Friday. So many days to the election, 25, the political news of Washington. Thrilled that you're with us on radio, on television, across this nation and around the world. John, I really want to look at the markets here as we frame up. Michael Scholl to join us in moments. Up 15. It's a bid to the market, John, day after day, down 28,400. What, John, 3% below record highs? And with that, some nice confirmations of good global news. Look at renminbi.
Up on the week by about 3% on the S&P 500, a stronger Chinese currency, a view being pushed through the Chinese market on the return from the holiday, Tom, and a policymaker tolerating it. The narrative has shifted aggressively and in a short amount of time, from fears about a contested election to the potential, I stress potential, of a blue wave. What we discussed in the previous hour is something we need to discuss in the next hour. How vulnerable is that brand new market narrative that's shifting things around this morning again?
Well, and some the political landscape here, of course, most interesting. The president's so far quiet through the morning on Twitter, hugely active yesterday across media. And Lisa, I guess an 8 p.m. appearance tonight. You wonder what the president will be doing before he gets to Tucker over at Fox at 8 p.m.
Well, we know that he's going to be holding what he calls the largest radio rally in history at 12 p.m. noon. Interesting to see whether his new strategy of going it alone, basically holding rallies, whether it's in person or digitally, will actually sway the polls. And to John's point, the idea the market is really going all in with this blue wave narrative. How confident can we be, Tom, to your point, in these polls that got it wrong in 2016, given how much people are going all in on this narrative?
I want to quote this directly, John. I mean, this is, to me, pretty unusual. I just had a physical. I can't see the president on the set in the little cute gown they put you in. It's, John, it fits like, size 2 or size 0.
I just don't want to think about that right now. So just get to whatever you want to read, please. There's nothing cute in my head right now, let me tell you.
Quote, he will now reprise a move on Fox. The president will undergo a medical evaluation from Dr. Mark Siegel. Now, I want to make clear, Dr. Mark Siegel's legit. He's with NYU Langone, and that's a good thing. But, John, can you just imagine a presidential physical on air?
I can try. Apparently it's going to happen a little bit later this evening. Should we talk about it, or should we talk about something else? This week, Tom, has just been so bizarre.
It has,
and I should also point out that Siegel is a medical contributor for Fox, who's had some pretty out there speculative thoughts on a whole range of things and the conditions of certain individuals without much evidence for it. So I'm sure we'll all be tuning in with Mr. Tucker a little bit later this evening.
We will see, and of course the politics through today. Kevin Cirilli back in Washington from the events in Salt Lake. Right now, to refirm and recalibrate the markets is Michael Scholl, working with Michael Aronston at Market Field Asset Management. We're thrilled that Dr. Scholl could join us this morning. Michael, you are expert in accounting. Does accounting matter right now in investment analysis?
I mean, I think it always does. I think it always does in the end. But I think in 2020, we're in this period of great uncertainty, where what has just happened doesn't matter as much as what may be about to happen. And I think at those points, accounting is less important than in other times.
How durable do you think this new shift is, Michael, in this market? It just feels like this narrative has flipped, and I know the polls have moved as well. But this narrative is still really, really young. How durable do you think some of these moves are in this market?
Well, I still think, the market got ahead of itself in August, when the election was not that big a deal. We had a real correction in September. I think you did take a lot of the unhealthy froth out of the market at that point in time. And, I think no one quite knows what a Democratic administration is going to look like, but I think would be happy to have uncertainty behind us. I think if there's one thing we can say about 2020 is we're all thoroughly sick and tired with the degree of uncertainty that we live with on a day-to-day basis. And the idea that the election can be settled in, if I said, a normal democratic way at the beginning of November, it is understandably appealing to people. I am not sure whether in the end a Democratic sweep would be that appealing in terms of its legislative slate. But I think those difficulties would be something the market would start to digest, in 2021 rather than this year.
In the meantime, Michael, you are going to get a surveillance exclusive. We're going to be starting a new drinking game every time people say rotation, because that will be the theme and the ongoing theme that people have been talking about, the rotation out of the big tech names and into the cyclicals. We are seeing the outperformance continue in early trading ahead of the market open today. How much further does that rotation have to go for it to be adequately priced in, given the backdrop of the assumed blue wave?
Well, I think it is a real phenomenon, and it's something that we expected to happen, fairly early. About 5-6 months ago, we started talking about this. I don't think it's actually being driven by the so-called blue wave. I think the blue wave is perhaps an excuse for people to jump on board to something which is already taking place. But I think provided it stays benign, and what I mean by benign is it's not that large cap tech is correcting hard, but it's going more sideways. The sort of relative market cap between a sector such as technology or communications and very small sectors such as materials and even the industrial sector, which is really quite small, is you're effectively forcing, there's a market cap imbalance here that can lead to a really quite powerful move in some of these cyclical sectors. So, I think it has legs. I think it has legs regardless of the electoral outcome. You may have certain subsectors which do much better with one outcome versus another. But I think this is a real and durable phenomenon, and it should be talked about by many people.
Michael Scholl, what does weak dollar or presumed weak dollar do to U.S. multinationals, and what does it do to their equity ownership?
I think that the total return of U.S. equities for non-U.S. investors has been boosted by a strong dollar significantly since 2014, and I think that tailwind is going to turn into something of a headwind. I also think that a period of cyclical outperformance, it's not terrible for the S&P 500, but it's not that helpful. I think the odds are that you see more cyclical indexes such as the DAX and the Nikkei, and some of the large Asian emerging market indexes such as Taiwan and Korea, are going to be able to post returns that are very competitive with the S&P, particularly on a currency-adjusted basis. And in fact, quietly year to date, that's already the case. The gap between the Nikkei, the DAX, and the S&P on a currency-adjusted basis is really pretty small at this point in time. And markets such as Korea and Taiwan, I think, are already outperforming.
Would love your thoughts on another trade related to a lot of this stuff, Michael. One of the trade du jour in the bond market right now is to short treasuries and get long bonds. What are your thoughts on that right now, Michael?
As I say, you probably have a currency headwind. I do think that if we do have a breakout in global yields, it looks to me as if it'll be U.S. yields that lead the way. But I think generally, if U.S. yields start to break out, some of those European yields will start to go with it. So I think in general, I think it's a good time to be cutting long duration positions in sovereign debt. I mean, I think that trade looks very long in the tooth. And if there's any kind of a doable recovery ahead of us, there's plenty of room for yields to rise globally.
A message for anyone out there that might be holding the Austrian Century bond. Michael, thank you, sir.
Anyone.
Great to catch up. Michael Scholl, of Market Field Asset Management. 10-year yield over in Italy, Tom, this morning, 72 basis points.
Yeah.
We're lower by another 4.
John, can you explain simply why? I think to so much of our audience, the Greek yield is a complete mystery. What's the why of price up and yield stunningly down?
2 huge components. So the new asset purchase program of the ECB this year, incredibly flexible, allowed it to buy Greek debt as well. So peripheral yields have been crushed. The whole fixed income universe has compressed. I think the more important element of this, though, is the redenomination risk that diminished a couple of months ago. Just taking a few steps towards further fiscal integration in the Eurozone, enough to reduce redenomination risk. But I have to emphasise there's a difference between repricing redenomination risk on the continent, peripheral yields lower, and repricing the recovery in Europe. And I think the recovery, the latter point, that's what's really being tested right now with the new COVID response from Spain, from France as well.
And to your good question to Michael Schul on this differential between Germany and the United States, I mean, the differential on inflation vector, I don't think I've ever seen where the U.S. is, gently upward, higher inflation. And I'm sorry, there's just a rollover of disinflation in Europe.
Well, that's the point, Tom, and that plays into the trade. That's why a lot of people are getting comfortable with short treasuries, long bonds. 10-year over in Germany right now, negative 54 basis points. Just think about that. Negative 54 basis points, in line with the depot rate, in line with the policy rate of the ECB. That's where 10-year debt is at the moment. And the 30-year is negative 12 basis points in Germany. That whole curve, Tom, negative and deeply depressed. That's the outlook for growth and inflation in Europe. What you see over in Italy is something else. It's something different. It's redenomination risk and a lot of QE, just bringing yields in. What you see in Germany is a market that's not got a great outlook for growth and reflation compared to, say, the United States. And I think, once again, Tom, that's why people are getting comfortable with that trade in the last few weeks. The Treasury yields can climb higher, the bund yields can remain anchored. I just wonder how stretched that spread can actually get, Tom, given where the global economy is at the moment.
What do I do if I own Italian bonds? I've got a massive capital gain, don't I?
You've got a lovely capital gain. Do you want to hold on to it? Do you want to go to cash?
I'm asking.
Just recycle it back into that triple leverage cash fund?
Francine and I are doing a remote from Gucci Garden in Florence. That's how we're working it out.
Sounds lovely. I heard that early this morning. Serious conversations right here on Bloomberg Surveillance.
They are.
More still to come. With Michael Zezas of Morgan Stanley. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. The Nobel Peace Prize has been awarded to the World Food Programme. The United Nations agency was honoured for its efforts to combat hunger and food insecurity around the globe, especially in conflict zones. Last year, the World Food Programme helped close to 100 million people in 88 countries. The White House is once again shifting its position on a stimulus package. Treasury Secretary Steven Mnuchin told House Speaker Nancy Pelosi the administration now wants an agreement on a large-scale relief bill. Earlier this week, the president had pulled his negotiators from talks on comprehensive legislation. And President Trump will go on Fox News tonight and get a medical evaluation. The doctor will be Mark Siegel, a Fox contributor. He has previously speculated with evidence that Joe Biden is using drugs before debates. Siegel has also said that House Speaker Nancy Pelosi should stop pontificating about the president's health. Louisiana is bracing today for Hurricane Delta. The storm has picked up strength and is now a Category 3, with winds up to 120 miles an hour. It's expected to slam into an area of Louisiana still recovering from Hurricane Laura. The hurricane has forced energy companies to shut down almost all the oil production in the Gulf of Mexico and most of the gas output. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
To help the airline workers. There is legislation that we had in the CARES Act, which we hope that we could continue for another 6 months or so. That expired the end of September. We can do that separately, but we cannot do it unless there's a big bill.
The negotiation continues. The House Speaker, Nancy Pelosi there, weighing on the latest negotiations and negotiating seemingly live on air on Bloomberg TV and radio. Live on Bloomberg TV and radio, this is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro, getting you prepared for the market open, 1 hour, 12 minutes away. The opening bell just around the corner. Your market action set up as follows, with equity futures adding just a little bit more weight to the rally of the week. Up about 3% on the week on the S&P 500. Biggest weekly gain potentially going all the way back to August. Euro dollar just south of 118, 117.96. Dollar China gets your attention overnight. China tolerating a stronger currency. And in the bond market, tons to talk about. Yields record lows. Greece yesterday, Italy today. In the United States, the 10-year yield 0.77%. Still in and around the middle of the range of the last several months. Just getting some headlines from the RNC chair, McDaniel, Tom Keene. Of course, she tested positive for COVID-19. She says she's doing well. Goes on to say that the election is tight. Feels good about the ground game. Speaking to Fox in the last hour. So that's the latest from the RNC chair, Tom.
You know, I'm sure it'll pick up through the day. Again, we're waiting for first comments from the president after an active Thursday as well. There is stimulus, and there'll be fancy conversations today among fancy people in Washington. There is no one in Washington who covers our policy research with tangible experience in actually getting infrastructure done like Michael Zezas. He's at Morgan Stanley. He's head of U.S. policy research, but far more importantly, cut his teeth out of Georgetown in municipal finance of actually getting bridges built. Michael, I want to go down to the granular here. Business Insider did a great article a year ago or so of the worst bridges in the world, and they go back to the Chester Nimitz Bridge in Honolulu, built in 1949, and stagger through the 50s up to the hemorrhage of construction we had in the 1970s, and it's all worn out. With this infrastructure that we're going to see, are those bridges and all the rest of it, is it finally going to get fixed?
I think we are a couple of steps away from that, right? So the stimulus package that's on the table, at least when it comes to, so state and local governments obviously are critical to infrastructure. They basically own and finance about 80% of infrastructure assets in the U.S. But this sort of first round of stimulus, should it come through, is about kind of plugging the hole in revenues, not providing kind of incremental infrastructure. If you want infrastructure, incremental on top of that, probably the political configuration you need coming out of the election is a sweep by the Democrats. If that's the case, and then they would have the motive and the opportunity to pass a large infrastructure bill, and you could start plugging some of those holes, a couple of $1 trillion plus throughout the country in terms of deferred capital needs and new capital around the country. But there's a lot of steps, a lot of nodes on the decision tree before you get there.
All right, so let's not talk about fixing the Nimitz Bridge of 1949 just yet. Tom, we'll discuss that perhaps next year. Michael, let's talk about who doesn't get paid if there is not a near-term fiscal support bill passed in Washington, D.C. How much can we expect state and local governments to have to lay off en masse some of their employees because they cannot increase their deficit the way the national government can?
Yeah, it's a good question, right? So let's start with some high-level numbers here. We estimate that states cumulatively through the end of 2021 are going to be short on revenues about $180 billion. Local governments about 90, so 270 total. How do you close those gaps? You've got austerity options, so taxing or cutting spending. You've got borrowing options, including obviously the open market, but also the MLF at the Fed, which basically is going to cover for all of that. So it's a bit of a choice here, and I expect different states will make different choices. Austerity will probably be part of the picture, and layoffs will probably be part of the picture. And I think borrowing will be too. It's not a great combination, but it's a middle road. When all this plays out, I suspect that states are probably waiting to see if the stimulus negotiation in D.C. is successful. Maybe they'll even hold on a couple more months to see if the election gets you a configuration that makes it successful. But after that, austerity has to kick in at some point.
Michael, you didn't mention default risk. Where does the D word fit into any of this?
I don't think it's particularly meaningful. I think this is a conversation that was perhaps legitimate to have in March and April in the teeth of all of this. But the Fed opening up the MLF, which has capacity for about $250 billion of borrowing for states, means that if states effectively wanted to term out their entire revenue shortfall, they could. Even they couldn't do it in the open market, the Fed is right there on the backstop. So the revenue shortfall sort of creating a jump to default story, I don't think is particularly meaningful here. The Fed basically is offering the option to states to push this out, spread it out over a few years if needed.
Michael, to the mix here of what Lisa was talking about and I was talking about, what happens if we get sort of the same thing but flipped? A Democratic president and still a Republican Senate. Then what happens to this huge demand for infrastructure?
Yeah, it's a good question. Our base case doesn't see in that situation that you would get an infrastructure bill. The fundamental problem on infrastructure has never been that the parties don't see the need for it. It's that they don't agree on how to finance it. And the Republican proposals always get twisted up around how do you increase spending without increasing the deficit or increasing taxes, two things that you basically can't get a majority of Republican representatives in D.C. to do. And then on the Democratic side, obviously, you're potentially willing to do one of those two things, but in a divided government scenario, you need the other side to agree. So unfortunately, I think infrastructure in the type of divided government scenario you talk about would just continue to be subject to gridlock.
Yeah.
Michael Zezas, good to hear from you, sir, of Morgan Stanley. Tom Keene, Infrastructure Week every week for the foreseeable future, it seems, down in Washington, D.C.
Absolutely. And, John, I just read an article, like literally crossing the River Thames in London is becoming sport because a number of those bridges are shut down as well. I mean, the stuff's just wearing out, right, John?
You could walk across them, Tom. Got to say, the city's pretty quiet. I tell you what people are really complaining about in the city of London right now, in the Square Mile. They've cut all the roads down. Now, this one's for you. If you go up Park Lane, it's been cut down to one lane now. So they've already cut all the roads down to one lane to allow for cyclists to go through. And if you get into one of the cabs in London right now, they are furious about it, Tom.
They can't do their famous U-turn.
They can't do that anyway in some places, but they're struggling for the most part anyway.
Right.
And the city's made it harder to drive around London.
Can the Bentley get through?
Your Bentley. Not
Look at
my
those
Bentley.
markets.
A Redo keeper of the
You called me from your
MX's
Bentley this morning. Yeah, right. How about those markets? Or as Lisa would say, let me tell you something. The bond market.
All right, John.
Futures up 15. This is Bloomberg.
Welcome to That's Debatable, an interactive series on today's most pressing issues. The resolution this time, is it time to redistribute the wealth? Two perspectives.
Pointing to billionaires and saying we should take their money away is ineffective political strategy.
We have a choice in this country, either great wealth in the hands of a few or a democracy.
I'm John Donvan. Join us for That's Debatable, presented by Bloomberg and Intelligence Squared, Friday at 7 p.m.
From London and New York, this is Bloomberg Surveillance for our audience worldwide, live on Bloomberg TV and radio, 8:30 Eastern, alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Price action shaping up as follows. Futures rallying, Stocks up all week. On the week, the S&P 500 up nicely. For the equity bulls, at least, up about 3%. Up 17 this morning, adding some weight to the benchmark, another half of 1%. Euro-dollar, euro firmer. Euro-dollar 117.98, just short of 118. A firmer euro in the mix this morning. Got to say, a weaker dollar all round through G10 and against China as well. The Chinese currency, the yuan, doing nicely, and the Chinese authorities tolerating it. That's the headline overnight, Tom, for the Chinese currency.
Yeah, no question about that. But notice the VIX as well, 25.83 on the VIX. To recap here, what was it, John? The beginning of the week, maybe a week ago, 29. And we've come in 3-4 big figures. And, you know, as John Norman mentioned earlier, you get the VIX down. It's a different world, isn't it?
Implied volatility was elevated all the way through to year end off the back of this contested election fear, Tom. And a lot of those concerns have faded, relatively speaking, over the last week.
Well, an eventful Friday, to say the least. But what we do at Bloomberg Surveillance on Friday, on radio, on television, is get ready for the weekend reading and get ready for the next week. Stephen Stanley is expert at that. He's won every trophy out there with Amherst Pierpont, and we're thrilled we could get an update. Stephen Stanley, what is the distinction right now? What is the update in your American economic call?
Sure. Well, I think, you know, we're slowing down. We've gone through the fast recovery phase here. We've gotten back to some percentage of normal. Consumption spending through August was about 80% of pre-pandemic levels. Employment only a little over half of the way back. And now I think we're kind of settling into the next phase, which is going to be continued recovery, but at a slower pace. And I think, you know, there's been a lot of discussion around the stimulus, and I think, in my mind, that I think a lot of people are assuming that the economy is entirely dependent on another round of stimulus like yesterday. And I think certainly more stimulus sooner would push growth higher. But I think the economy can continue to recover without it in the near term.
What is the partition right now in America among goods producers versus service producers?
Well, it's pretty stark because the goods side of the economy in many ways is back to pre-pandemic levels and even beyond it. Retail sales, core durable goods orders, obviously the housing sector. So there are a number of parts of the economy that are, you know, I don't know, booming might be a little too strong, but certainly very robust. And even within the service sector, there are winners and losers, and it's really just a function of the pandemic and the restrictions that have been put in place. So, you know, you've got some sectors that are struggling, like restaurants, and then you've got other sectors that are just kind of flat on their back, air travel, hotels.
Well, Stephen, that's the story at the moment. Everyone's calling this the K-shaped recovery now. It's getting some real traction. I just wonder how extended those two legs of that K can actually get.
Well, I think that's totally a function of the virus. You know, if 6 months from now we have vaccines and effective treatments, which seems like not an unrealistic scenario, then you could see a quick revival in some of those sectors that are having trouble right now, even though they've made virtually no progress so far. And I think that's the difficulty that we all have in the markets and that the Fed has, is that visibility is just not very far. I mean, maybe we have a pretty good idea what things are going to look like in 2 or 3 months, but once you start talking about 6 months out, 12 months out, 2 years out, you know, literally the scenario could be anything.
Stephen, do you think these shifts are COVID dependent, or do you think there's some permanency to them?
There's certainly things that have taken place that are going to be permanent. Some structural changes in the economy that were ongoing that have been accelerated. For example, the move to online retailers versus brick and mortar. That's something that's been going on for years, and it's clearly been accelerated. I think, you know, one of the most important things perhaps that's come out of this is going to be the move toward work from home, and I think there are going to be people who continue to work from home or at least work from home some days that maybe that never would have happened in the absence of the pandemic. So there's certainly things that are changing. Business travel maybe is permanently curtailed to a degree. We'll have to see. So yes, I think there will be structural changes well beyond the point at which the pandemic is of memory.
Do you think that these disruptions will have material structural issues for the market? I'm thinking, for example, you talk about commercial real estate, people expecting further declines there, and then I think about regional banks and how much they own with respect to commercial real estate assets. How much will you expect the Fed to step in to smooth out any bumps as we go about this recovery, regardless of any fiscal support from Washington?
Right. Well, I think from the Fed's perspective, they're feeling better about this crisis than the last one because we're starting with a financial system that's in much better shape. So they have provided generous support to the markets, and they stand ready as a backstop in a lot of different places. And thankfully, a lot of those facilities haven't really needed to be used because the markets have recovered quickly. So yeah, they're there. I don't think that they're just going to bail out anyone and everyone that that needs it, because you kind of have to allow that creative destruction to take place as the economy evolves. But I think that they're going to be pretty generous about providing a backstop and making sure that any adjustments like that need to take place don't become a structural issue, a systemic issue for the financial system.
And they've made this clear. And yesterday in the meeting minutes from the previous FOMC meeting, they talked about how they could potentially use additional QE asset purchases to support the economy. Are they supporting the economy at this point? How much more can suppressing 10-year yields by another 10 basis points do to actually get more people at work?
Yeah, I'm very sympathetic to that view, and it's one that I made for years. I made it the last time through, and it's interesting. There was a study that came out recently that found that central bank economists around the world put a lot more weight or effectiveness on QE purchases than non-central bank, private academic economists. And I think there maybe is a blind spot there. The fact is, the Fed, that's really the only major button that they can push beyond forward guidance. So they don't want to admit that it maybe isn't all that helpful. But I mean, as you say, 10-year yields are around 75 basis points. I don't know that there's much marginal benefit to taking them down another 10 or 15 or 20 basis points from here.
If you're just joining us on Bloomberg Radio, Bloomberg Television, Stephen Stanley with us with Amherst Pierpont. Stephen, you know politics is about jobs. Maybe even jobs is about politics. What's the true unemployment rate in America this 25 days to the election?
Yeah, I think we've got an 8% unemployment rate. Then you've got about another 2% decline in labor force participation from before the pandemic. And some of those folks won't be able to come back until things straighten out, until schools are fully open, for example. And some of these businesses are able to get back to normal. And then you've got people who are only able to work part-time. So probably somewhere in the low double digits, but it's certainly down very sharply, from what an all-in unemployment rate would have been at the peak of the lockdowns, when you're probably talking about something above 20%.
Stephen Stanley, great to catch up, sir. Stephen Stanley there of Amherst Pierpont. Some headlines I want to get to just very quickly. This coming from London's Mayor Sadiq Khan, talking to RBC. That's a radio station here in London. The new London lockdown restrictions would be inevitable. This coming from Sadiq Khan. Of course, it's the Prime Minister that will ultimately make this decision. It will come from government. Sadiq Khan has actually been calling on the government to do more to tighten things up in the city. So that's the headline coming from the Mayor, Tom. We've seen what's happening in Scotland as they've tightened things up through central Scotland, including Glasgow and Edinburgh, shutting down the pubs for the next several weeks. Right. Story that we might see actually copied through much of England as well. And I think the lesson through the United Kingdom, Tom, is a lot of these decisions are being made more locally in Scotland, in England as well. What we saw play out in Madrid with the Spanish government and that standoff between local policymakers and the government is something that we're trying to reconcile this morning too.
Well, what is the pathway, John, from hugely increasing cases, the identification of the virus, to the idea of you're going to be at home, to you're in a hospital, and then, of course, the tragic deaths that follow? Are the deaths, or the be at home, are the hospital entries increasing as the cases come up?
So to make this really simple, some of the cases in some of the countries are as high as they were several months ago. Quite clearly, though, Tom, hospital capacity has not been breached in the same way. Though if you talk to these policymakers, if you listen to them, they are alarmed about the acceleration and the trajectory we're on. So what you're likely to see is more restrictions before you see a full-scale lockdown like we saw earlier in the spring. But that's the story gripping Europe, and different countries, different experiences. Quite clearly at the moment, France and Spain are struggling. And you actually see that captured in the economic data. The economic story is there for all to see. I don't know if you saw the industrial productions come out of Italy. That data this morning, huge upside surprise for the month of August. And you can see it very plain and simple through Europe. If you're struggling with COVID-19 still, your economic data isn't pretty. See it in the PMIs, see it in the production numbers. If you're doing okay, doing better, relatively speaking, then the data's better too.
And that analog, John, in America, certainly the increased cases in the Midwest up towards the Dakotas and even over to Wisconsin. I'm not going to say, John, it's in the battleground states, but certainly it's on the cusp of that where, you know, the increasing cases are front and center.
You've just got to believe, have some faith that therapeutics have improved, that we can deal with this a whole lot better. That's why I don't think comparing the case count now to the case count before is that instructive.
I agree.
And I think policymakers have got to get their hands around that too, Tom.
Yeah, I agree.
In this market right now, equity futures doing well, Tom, up 17 on the S&P 500, advancing 0.5%. In the bond market, Treasury yields getting your attention at the start of the week, yields bleeding higher.
Look at the 10-year
just
yield.
a little bit. Today, unchanged, 0.782%. Talk about selling it. Euro dollar, 118.
Come on, where were we a week ago? Where were we
what am I
2 weeks
looking
ago?
at? What am I looking at? What am I looking at?
The 10-year yield, 0.7820 to 4 digits.
I know, it was a story Monday, Tuesday, Tom.
Sorry, I wasn't here.
Look at that yield.
You were. Someone was in a bow tie, talking like you.
I didn't tell you that. When I had my physical this week, actually, I kept my bow tie on.
With the gown.
Oh.
The image. The image is
You're going to do your physical live on TV?
Floor management just walked off the floor.
Yes.
Yeah, I don't blame them. I'd be gone too. Coming up, Colin Whitmer, PwC Deals Leader on Bloomberg.
With the First Word News, I'm Rishka Gupta. Looks like the on-again, off-again talks for a large-scale stimulus bill are back on again. Treasury Secretary Steven Mnuchin told House Speaker Nancy Pelosi that President Trump now wants a comprehensive relief package. Earlier this week, the president had ended talks and said they wouldn't resume until after the election. And President Trump says he feels really good and hopes to hold a campaign rally in Florida on Saturday. The White House doctor has given him the go-ahead for public engagement starting this weekend. It was a week ago today that the president was hospitalized with the coronavirus. And President Trump will go on Fox News tonight and get a medical evaluation. The doctor will be Mark Siegel, a Fox contributor. He has previously speculated without evidence that Joe Biden is using drugs before debates. Siegel has also said that House Speaker Nancy Pelosi should stop pontificating about the president's health. Now, Michigan's governor blamed President Trump for fostering hate groups hours after the FBI charged 6 people with trying to kidnap her. Governor Gretchen Whitmer says the president has given comfort to those who spread fear and hatred. The White House says he condemns all forms of hate. Suspects allegedly stalked out Whitmer's vacation home and planned to set off bombs while they kidnapped her. The Justice Department has sued Yale University, claiming it illegally discriminates against white and Asian American applicants. The lawsuit claims the school favors Black and Hispanic students in undergraduate admissions. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Eaton Vance has been around for over 90 years. World-class, huge talent, perfectly complementary businesses. There'll be very little dislocation, high growth, some great businesses with Parametrics in particular has been growing very fast. Their traditional asset management space, the Calvert funds in sustainability. So this was a no-brainer. We paid $4 for it.
The Morgan Stanley Chairman and CEO, James Gorman, relentlessly focused through 2020. Coming up a little bit later. Looking forward to that, Tom.
Coming on to talk about the New York Jets. I mean, he's not,
We might get there just a little bit at the end of the conversation. I don't know if you can watch the New York Jets on British TV, but I'll ask.
There's a bar over by the tower, the place, like the fort, with the door and the river. And
why am I surprised?
I watched.
Honestly.
It's not a pub, it's a bar.
Name a city, name a town. He knows a bar, he knows a pub. And there's a story in there somewhere that starts with a drink.
Go away and start writing the script for the real yield. John Farrell, of course, moving on to one of his properties as well. Yesterday was extraordinary. And buried in all of it was a small breakup of a 109-year-old company. What's important about deal making, and we're as guilty of this as anyone, we look at the big deals. Most of the knowledge about deals, and I hate that word, comes from people that structure more realistic, more tangible deals with a lot of sweat. Colin Whitmer does that at PwC, where he is deals leader, and he joins us now. Colin, the train wreck that is international business machines, and clearly the spin, and our Enron Rago was just fabulous about the challenges forward. It's been painful. It's been slow. Have you been surprised how long it took for IBM to get the message out?
Well, I think less about that transaction and more about what's just happening in the market. We do see a tremendous amount of activity around divestitures. It is just time for companies after a really long bull run to take a look at the company, to take a look at what they've purchased, look at what they have in their portfolio, and just see if there's something that could be better in somebody else's hands, something that might be growing faster, something that might be more attractive to another acquirer.
And of course, Red Hat, folks, is that part of it, that excitement for IBM? If that's the case, Colin, is it a catalyst from the financial office saying the financial flexibility now is so great and it may not be there in 12 months?
Yeah, well, let's just step back and take a look at what's happening in the market overall. If you looked at deal volume in Q3, it's up 25% over Q2. Now, maybe not that impressive because Q2 was the most anemic quarter we've ever seen for deals since the dot-com era. But keep in mind, it's also up 3% over the prior year. But the real story under those numbers is really what's happening with mega deals. You think about it, deal value in the third quarter was almost $500 billion, and there were 19 mega deals in there. And what's driving people to do these mega deals is what you're talking about, Tom, is the availability of capital. You think about the cash on balance sheets, you think about private equity dry powder, and look, you think about how well the stock market's been doing recently. A lot of these deals were done with a mix of cash and stock.
And that story.
As I step back, the one other thing to think about with those mega deals is it really is a drive for scale, because 8 of those top 10 deals were done horizontal deals. So they were to go into acquire competitors in new markets. And 9 out of those top 10 were done in the same industry. So think semiconductor, think healthcare, think biotech.
And we started with that thought from Mark Gorman of Morgan Stanley talking about their acquisition of Eaton Vance. How much more consolidation are you expecting? Any more mega deals within the banking sector in particular?
Yes, I think banking sector will be hot. Still think healthcare will be hot, and we are expecting more mega deals. I was, quite frankly, a little bit surprised at the number of 19, which is pretty impressive. But we think with the availability of capital, we do think just M&A is going to sort of lead us out of this recession and recover quicker than the overall economy. And again, it's just the system is awash with capital, and people are searching for scale and to transform their business after COVID, right? To mold their business to be fit for purpose for what might have happened to their customer base and what might have happened to their industry dynamics.
So then there's this question of regulatory pressure, and I'm thinking particularly of the tech sector. There's been calls by Democrats to break up some of the big tech leaders. Those pretty much aren't probably going to get through, but they could potentially stymie other acquisitions. Do you expect some of those kinds of deals to dry up based on that pressure?
I think that regulatory pressure is always going to be there, and it's going to put pressure on that sector. So yes, I do think that's going to be something that sector is going to have to deal with in the near future.
I want to talk about defensive transactions. I don't know if that's what Mr. Gorman did yesterday or others, but sometimes strategically it's selling to the board or boards plural that we got to do this because if we don't do it, the other guy will do it. Is that game theory in play?
I do see that, and I do hear that. I mean, there's the race for scale, like I mentioned before, to scale the business so that you can drive the cost down on the business. And at times there are defensive acquisitions as well.
We got to leave it there. Colin Whitmer, incredibly busy week. Wonderful to finish strong with you. Colin Whitmer with PwC and their deals leader as well. Lisa, we set up here, and, first of all, futures continue to advance, up 15, now up 22. Dow futures up 159. I mean, I guess we're not a one-day leap, Lisa, to a record high, but we're getting there.
Yeah, and the idea that's interesting to me is the data doesn't matter. The economic data, even though we see the virus spreading in Europe and frankly spreading in many places in the United States, people are mapping out a time beyond the pandemic. I am struck by the fact, how do we do this when so much of people's reticence to go out depends on the virus, not any official policy on not going out? How do we just sort of look past this, Tom?
On a Friday, remember, it's Friday evening on the Pacific Rim, if I get my time zones right. I got to think through that. But renminbi now breaching 7 solidly. We have a 6.6997 to 4 Roman numerals, 6.70 renminbi. I mean, it's amazing, Lisa, to see that Pacific Rim strength that China Beijing Leland Miller was talking about.
And Leland Miller also talking about at a certain point, the Chinese officials are not going to like this, especially given that some of the economic power that they've gotten has come from their exports, which have surged relative to imports, particularly with the U.S.
Well, John Farrow and I had a successful week boxing Lisa Abramowitz out. No talk of IG or high yield. Lisa, what did IG and high yield do this week?
They got huge inflows and they did very well.
They got money coming in.
Yes, absolutely. It was actually one of the biggest weeks in a long time for flows into these funds, and people looking at this as the alternative, a little bit of a cushion above rates given the fact that people are expecting inflation to pick up. Again, this all is predicated on the idea of recovery and the idea that companies are going to be in much better shape come the next 6 months, 12 months.
Circle it all back to Benjamin Laidler over at Tower Hudson. He says the money's going out of equities. That was one of his insights here. Maybe it's all going into high yield. It has been an extraordinary week here. We're going to move the discussion forward, and so much of the discussion today will be on politics. Kevin Cirilli back in Washington, and David Weston, of course, at 12 noon, driving that conversation forward. And again, maybe, possibly, we'll hear from the two candidates through the day. On Bloomberg Markets this afternoon, Scott Minerd of Guggenheim. This is Bloomberg Radio. This is Bloomberg Television. Good morning.
Me levanté temprano, me enganché los night. Voy pa' la avenida, me siento rulay. Una onza cuarta y una jumbo light. Nadie me detiene, yo voy por ahí. Voy por ahí, 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 voy pa' ustedes. Lo voy a chocar de la pared. Tú no eres el dueño de Instagram pa' afrontarme con redes. Hagan para porque en poco tiempo yo logré lo que ustedes no pueden. Son tantas facturas que llegan por pele. Estamos a otro nivel, yo me está haciendo los papeles. Yo no soy del PLD, pero soy del DPL. Se van a poner los huevos a cheles. Cuando baje para el norte en el avión me voy a instalar los cacabeles. Supiste, niño, ando en mi diligencia personal, buscando una loca que me pague biles semanales. Me gusta meterlo porque me sale del bloque para la cabaña y de la cabaña comprarme los pedales. Voy por ahí, 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 voy por ahí. Cuidado que yo ando con Tony tú. Si tú quieres buscarte par de pesos, manda tu solicitud. Ellos dicen que yo no me busco y mi casa llena de papelitos de Vivienda de YouTube. Pásate, que te exploto como un LM. Antes tenía que capiar, ahora la tengo en el M. Pile hecha pa' corte que tan loca que la quemen y mujeres en USA que dan $1000 pa' verme. En Europa estoy matando, muy difícil de creerlo. Pero que gaste ese mi sello, ustedes tienen que moverlo. Gracias papá Dios por darme todo lo que yo anhelo. Caminando en paralelo en este mundo paralelo. Una onza cuarta, una jumbo light. Yo voy por ahí, 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 voy por bloque Gatti. Real, llegó el control del dembow. No te voy a hablar más. Angelo Santiago en la casa. Jordi, Tejada, Mr. P, Yayo, Leo RD produciendo. Tribu Music, la empresa. Mickey, Venus Music, que lo quedó, que dame el dato. ¿Qué dato te doy? Que vinimos a controlar. Dame el dato. TV, tú eres mío. Real. 21, Papá Nari, Yay, Cristal, la mamá de este sicario. Real, 031. Free Papi, Negro Fashion, en la roca de Kosovo. Me levanto temprano, me enganché los nights. Voy para la avenida, me siento rulay. Una onda cuarta, una jumbo light. Yo voy por ahí. Normalito y polaco. Real.
The second half will be a lot stronger than the first half in China. We're heading to what we call the golden season of auto sales.
We are very confident, we're going to have another big growth 2021 versus 2020.
We did not see people kind of holding back.
Chinese customers are into, right now, buying individual mobility.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
From London and New York, for our audience worldwide, good morning, good morning. The countdown to the Open starts right now. 30 minutes away from the opening bell with equity futures nicely positive, adding some weight to this week's rally. We're up 20 points. We advance 0.6%. And we begin with the big issue, playing fiscal headline roulette. The White House signaling openness to large-scale stimulus after Speaker Pelosi pushed back on individual measures.
We want to help the airline workers. There is legislation that we had in the CARES Act, which we hope that we could continue for another 6 months or so. That expired the end of September. We can do that separately, but we cannot do it unless there's a big bill.
The president telling Fox Business that stimulus talks are starting to work out, saying, quote, "We started talking again, and we're talking about airlines, and we're talking about a bigger deal than airlines. We're talking about a deal with $1,200 per person. We're talking about other things." Leaving the on again, off again, on again. Talks, on again. But it's important to remember there are three players in these talks, and the final third has been relatively quiet for weeks now. Senator Majority Leader Mitch McConnell providing a reality check, speaking in Kentucky.
We do agree that another rescue package is needed. We have vast differences about how much we should spend. We've sort of agreed on the need. We haven't been able to agree on the amount. And I do believe that the reason for that is the proximity to the election.
Let's bring in Kevin Cerulli, shall we? Bloomberg chief Washington correspondent. He joins us now. Kevin, on again and off again, and they're on again. Have we gone anywhere this week?
You know, and I would add a fourth pillar to this, which is the private sector, which you've got airline CEOs now speaking out saying that they're going to have additional layoffs should Washington not get their act together. Two things. First and foremost, I was having some conversations with some sources close to the president on the stimulus negotiations, and they said that the president's decision to withdraw from the stimulus in the tweet that caught Democrats and Republicans off guard earlier this week was really to suggest that airline package and airline relief would not be a definition of stimulus, meaning that if they do pass an airline package, that they could come back and pass additional relief in the lame duck or in the first quarter of next year. Secondly, Senate Majority Leader Mitch McConnell now increasingly starting to talk more aggressively in these negotiations and put some pressure on Speaker Pelosi. And we should note, yesterday I spoke with a source who pointed out to me, it's not just Republicans that Speaker Pelosi is having to negotiate with, it's also centrist Democrats within her own party who are increasingly skeptical of the impact that this could have on down ballot races, and that her popularity could increase should she get to some type of deal. I thought you heard that in some of her rhetoric with David Weston yesterday, and I would anticipate that continues. But they're very close to an airline stimulus package.
Kevin Cerulli, we hope so. Thank you very much for joining us, sir. A bit of a technical problem there, so we've got to let you go. Kevin, great to catch up, as always. Mohammed Al-Arian of Queen's College weighing in on the stimulus talks, tweeting the following. On the surface, the political debate on more fiscal relief has shifted to a piecemeal from a significantly more comprehensive approach. The key questions are, how many standalones? Is there enough congressional time given the SCOTUS issue and the macroeconomic impact? I'm pleased to say, like every Friday morning, for the last 9 months or so, Mohammed joins us now. Mohammed, fantastic to catch up with you, sir, as always. How do you read this game playing out down on Capitol Hill?
You know, it's total confusion. One day it's this, one day it's that. But the clock is ticking, and I think we have to realize the clock is ticking. John, someone described it to me as, in game theory terms, it's the prisoner's dilemma. You don't have enough trust, you don't have enough coordination, and therefore it's very difficult to get to an outcome. But it doesn't matter because the market will hear what it wants to hear, and right now this market wants to go higher.
Mohammed, what's the cheat guide to these talks right now? It just seems to me that the one thing that hasn't really changed is Leader McConnell. Leader McConnell hasn't really shown his hands whatsoever. He said repeatedly over the last several months they can't get a big package through the Senate. So what has actually changed if a key third of this negotiation hasn't really moved the dial?
Yeah, he's got to figure out what does it mean for individual Senate races that are close. So he's got a completely different political calculus that he has to take into account. And it's not clear at this point what the political implications for each party is. So this is a really complicated equation to solve, and you need something to force a solution. I can't quite see what it is, Jonathan.
Markets responded to this quite clearly. We've seen the long end of the yield curve start to push higher, 10s, 30s. Mohammed, markets will respond one way. Economic actors may not respond at all. Can you walk me through that distinction?
Yeah, you know, when it comes to markets, and particularly the equity market and risk markets, I think it's a simple story. Honestly, it's behavioral. It's to understand we are being driven by behavioral consideration, and we look for a narrative ex post. And I think the causality has been turned around. In terms of the economy, I think the evidence is overwhelming. And we got the evidence today again from the UK, the monthly GDP growth rate. And it's great to have monthly GDPs. Monthly GDP in August, half of what was expected. Throughout the advanced countries, the pace of economic recovery is slowing. And I can't think of any exception to that general statement when it comes to the systemically important advanced economies.
Well, can we talk about the United States with that in mind, Mohammed? One thing that you wrote about earlier this week was the risk that consumers would disengage, that companies might lose confidence. Any evidence of that right now?
Yeah, so if you look at the high frequency data that a lot of us look at, you start to see not just leveling off, but it's starting to head a little bit down. And That makes sense because cases are going up again. Now, the good news, and I think it is good news, the consequences of COVID so far appear to be less severe this time around. So hopefully you won't get as much of a pullback. Always remember this notion of human counterparty risk. It is critical. It's something that we don't understand fully, but it is something that is very much in play today around the world.
So many people have described the recovery that we're seeing as a K-shaped recovery, Mohammed, that the haves are doing better, that the have-nots are doing a whole lot worse. Can that carry on? Is that sustainable?
I mean, it is sustainable in terms of the economics. You're really asking a political and social question. But in terms of the economics, there's no reason why the strong doesn't get stronger and the weak doesn't get weaker. But that has massive implications going forward. But it is sustainable as long as politics or the street doesn't get in the way of it.
Well, one thing you said, Mohammed, several months ago on this programme when you and I caught up, you were talking about the length of time we remain below capacity, the longer we are below potential, the lower potential might be in the future. How much damage is being done right now?
That's a lot, and it depends where you look. So in some countries, it's about scarring. So in the United States, it's about scarring, meaning that you lose some potential, but you haven't fundamentally altered your growth model in terms of its potency. If you go to some other countries, it's about the growth model, and that's a much more consequential issue. Your growth models becomes less and less relevant. So if you go to small open economies that depend on the global economy to turbocharge their growth, that growth model is becoming less and less potent. So it varies, but at the minimum, it's a scarring, but it is also much more consequential for some other countries.
Listen to the issues we're talking about. These are serious long-term economic issues, Mohammed, and yet markets and market participants are incredibly faithful in the belief that the Federal Reserve can keep financial conditions loose. Do you think they can? Is that really, to borrow your phrase, the only game in town right now, or is something else going on?
So I think it's yes to both. Yes, they will keep conditions very loose. And even if we get a fiscal stimulus, they're not going to step back. They're going to be pedal to the metal for a while. In terms of the second question, it's not just that, John. The behavioral aspects are really important. And we're not used to think about behavioral aspects. But increasingly, this market believes that there is no alternative to equities. Equities are your risk mitigator. Equities are your upside claim. Equities can do everything for you because everything else looks worse than equities. That's one. Two, it has worked. So there's a massive fear of missing out. And three, which is really important, is now the behavior happens very quickly. You buy the dip immediately. And then we look for a narrative that justifies why we've bounced up.
So, Mohammed, let's talk about that. It's price, then narrative, not narrative, then price. What we've seen shift over the last week, and radically so, is this fresh narrative of a blue wave. That's the reason we're starting to see Treasury yields higher, the reason you're starting to see an internal rotation in the equity market, or the reason people think you will in the foreseeable future over the long term. Mohammed, how vulnerable do you think that brand new narrative is, considering 2 weeks ago we were talking about a contested election and elevated volatility going into year-end?
Yeah, and before that, we were talking about how a divided government is the best thing for the marketplace. So, that narrative evolves. Again, I think you're right, it's price. Then what follows is narrative. I think that if you think that the blue wave, should it materialize, is unambiguously good for markets, I don't think that's the case. I think it's unambiguously good for certain sectors, but certainly not for everything there. But John, again, we could talk about narratives till tomorrow morning. Ultimately, the causality, as you and I think, agree, is the other way around.
Mohammed Al-Arian, fantastic to catch up with you, sir. As always, the president of Queen's College, Cambridge. Thank you, sir. Good to catch up. Let's head to the market desk and get you some movers this morning. Ahead of the opening bell with futures positive, here's Abigail.
John, let's start out with this morning's top stock story, and that, of course, is AMD and Xilinx. We have the shares of Xilinx absolutely soaring on a report the news that AMD is said to be in talks to buy Xilinx, its competitor, for about $30 billion. Now, Xilinx has a $25 billion enterprise, so that's a nice premium, and you do see those shares popping. And, of course, this could help AMD against their rival Intel. Gilead Sciences, the biotech giant, also popping higher, up 1.8%, as the company says that its phase 3 remdesivir study shows mortality reduction for hospitalized patients by 5 to 7 days, so a bright spot there. And then finally, GE up 5.7%, a new buy rating from Goldman Sachs, a $10 price target, suggesting some nice upside potential could be there. The analysts there saying that GE is the best self-help vaccine story across industrials. Investors liking that news on the morning. Again, sending the shares of GE higher, John.
Abigail, thank you. Coming up on this programme, Fed officials putting the pressure on Washington to renew fiscal support. And that conversation coming up next with Alpha Omega CEO Peter Cecchini. 18 minutes away from the opening bell. Equity futures shaping up as follows. A rally to end the week after a really nice week of gains on the S&P 500. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
I think the Fed can do more, and I'm sure we will look at all our options, but those aren't substitutes for fiscal policy. I right now would be hesitant to see us doing more in that area because I don't see the benefits. I could see how it would further add fuel to the financial markets. I'm more skeptical how much it would help the real economy.
Dallas Fed President Robert Kaplan applying pressure on Washington, D.C. to reach an agreement on another stimulus package. Bloomberg International economics and policy correspondent Michael McKee joins us now for more. Good morning, Mike.
Good morning, John. That is a fairly widespread view at the Fed these days. We had Eric Rosengren of the Boston Fed saying much the same thing yesterday. The problem, and I've been banging on about this for a long time, and I've asked Chairman Jay Powell several times about it, is that the Fed raises or lowers interest rates. That's their tool. That's their job. And on the margin, maybe that boosts stocks. But the upper 10% of Americans by income own 88% of the stocks. So it really doesn't help the people who've been affected by the virus. Maybe if they can generate inflation, they can lower real rates some more. But is there any real demand for lending? And so right now, at this point, what's the point is what these Fed officials are saying. The effective Fed funds rate is 8 basis points. If you've ruled out negative rates, and they have, you can't get much lower. You take a look now at the level of yields for 2-year and 10 years. When you put in a term premium, you're not going to be able to lower that much more. You can get it down a little bit, but the spread's only about 20 basis points. Now, you can term out. You can buy more at the long end, but with the spread that low, do you really make a difference? Suppose you do want to, and you're able to flatten and lower the curve. Do you get anything out of it? Well, take a look at this. Mortgage rates are at record lows. We know that, and the housing industry has been doing very, very well. But look at the other line there. Mortgage credit availability is falling. Banks, this is going to be interesting for you to talk about with the earnings next week, are pulling back from mortgage lending as the threat of defaults and foreclosures rise with the economy slowing. Meanwhile, companies borrowed a lot at the beginning of the pandemic, and right now demand for corporate loans is falling significantly. So the Fed has tools, yes, but they use them to raise or lower rates, and loan demand is falling, so there doesn't seem to be a credit cost problem in the economy. They know it, the market knows it, and now they're talking about it.
A huge dependence on the Federal Reserve. Shock horror. Mike McKee, great to catch up, sir. Alpha Amigo's Peter Cicchini discussing the negative impact of low Treasury yields, saying, quote, low rates can't support ever-rising equity prices when cash flows remain challenged or are contracting and credit quality continues to deteriorate. Peter joins us right now. Now, Peter Cicchini, this was a story in Japan. In Europe, you can do as much QE as you like sometimes. Sometimes the equity market just can't catch a bid. Are you expecting something similar in the United States?
In fact, I am. And believe it or not, Jonathan, we've known each other a while now. I really am an optimist by nature. But in situations like this, and you were speaking of it earlier with Tom Keene, it's been a bizarre week, and I think markets have been behaving equally as bizarrely, trading up ex post, as Mohammed was saying, on very, very flimsy narratives. When you look at low rates, and to Mike McKee's point just now, the Fed acts through a rate mechanism. It is not a quantity of money mechanism, as some seem to still believe. And what that means is that their policy space is very limited. And even if the Fed were to philosophically shift and go to negative rates, which I think is highly unlikely, Japan shows us unequivocally that does not necessarily mean that equities will catch a bid, and it does not necessarily mean that the economy can avoid recession. If we look at Japan since 2008, they've been in and out of recession serially. And when you look at their PE ratios, they traded a discount to the S&P 500 in their broad indices.
You mentioned this market narrative, and I'll ask every single guest on this program this question today. How vulnerable you think this new market narrative is, that this market and market participants are gripping tightly hold of?
Yeah, look, I just came out with a piece called Nonsense Narratives, and much more kindly, less kindly phrased than I think Mohammed said it. But this narrative that a Biden victory is going to somehow result in a larger stimulus package, which is unequivocally good for the economy, I think is probably not correct. When we think about the narrative coming into the 2016 election, it was quite the opposite. It was, well, President Trump was going to come in and he was going to have, he was going to lower corporate taxes, which he did. He was going to have more regulatory friendly policies, which he did. What is the offset to a potentially larger stimulus package on a Biden victory? Well, it's going to be higher taxes. And by the way, that happens whether there's blue or red in the White House, because fiscal deficits are at $3 trillion year to date. It's enormous. For U.S. GDP, debt to GDP is at 130%, an unthinkable level just a few years ago. So taxes will and must go up at some point, because I do not believe we can forever rely on the Fed to monetize all of our Treasury issuance. It creates incredible moral hazard, and I think risks, frankly, fundamentally to our democracy.
Ultimately, for now, it's going to be a policy choice, Peter, before the market tests this administration or the next administration or the one after that anytime soon. My question to you, and you've touched on the issue for me through much of this week, we've talked so much about fiscal stimulus, but very little about a corporate tax hike. And I'm just wondering how you view the potential for that. Senator Harris was talking about it in the debate. Wasn't hidden. We'll undo day one what they did with that tax cut, with the exception of people who earn under $400,000. That's the income tax story. Talk to me about the corporate tax story.
Yeah, well, certainly corporate taxes will go at least back up to 28%, and frankly could go much higher. I mean, the deficit holes that we're looking at right now are enormous for the foreseeable future. And again, I do believe that, it is fundamental to a capitalist democracy that we have a legislature that is designed to decide what spending is worthwhile based on what the people believe they can tolerate in terms of taxes. Otherwise, it leads to a situation where the Monetary Policy Authority can simply monetize everything, really leading to a tax and spend situation that's no longer, half of that equation is no longer driven by Congress, but by an unelected central banking authority. And that, to me, is an unsustainable outcome for our democracy. So taxes must rise. That's obviously quite fluid as to how much they will rise, but certainly no one is talking about that half of the equation. They're speaking simply to the larger fiscal stimulus package, which, again, I believe is necessary, but that package will not offset the longer-term consequences of higher taxation.
Yeah. Peter, final question from me. Got to get a trade from you for the next month. If you disagree with a lot of what you're hearing on programs like this over the last week or so, what is the trade for you?
Well, look, Mike touched on it. You touched on it on the outset of this Q&A, which is that, rates are extremely low. I have liked gold for some time. I will continue to like gold for as long as we are near the zero bound, because I think it is an important substitute for treasuries with rates as low as they are. And as I've mentioned, I also don't mind being long the dollar, because I think these narratives are going to fall to pieces. There will be a risk off, and there will be a flight to dollar assets on safety.
And you will be back on the programme to talk about whether that happens or not. Peter Cecchini, great to catch up, sir, as always. Coming up on the programme, the analyst action you need to know. That'll be next in our morning calls, and later around the opening bell. JP Morgan's Monica DeCenso. Looking forward to that in just a moment. 7 minutes away, equity futures bid up 0.6%. This is Bloomberg.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Five minutes away from the opening bell, equity futures with a nice little lift, up 20 points on the S&P 500. Time now for some morning calls. A look at some of the analyst recommendations on Wall Street this morning. Your first call from Susquehanna downgrading American Express to neutral, 110 price target. The analyst expecting results to fall short of consensus growth estimates. Next up, Goldman resuming coverage of GE with a buy, a $10 price target. The analyst seeing upside of at least 50%, citing good progress under new CEO Larry Culp. And finally, Stifel downgrading VF Corp to a hold, $80 price target. The analyst citing limited long-term growth potential and an appropriate valuation. Through the calls behind us, the opening bell just ahead. Investors starting to envision a market under a Biden presidency. We'll have that conversation with JP Morgan's Monica DeCenso. 4 minutes out from the cash open, equities up. This is Bloomberg.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacqua.
As the 2020 presidential race comes down to the wire, the outcome may hinge on a few key states. I'm David Weston. Join me for a swing state special focusing on Arizona, North Carolina, and Ohio this weekend on Bloomberg Television.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Another couple of weeks that have felt like a couple of years in the equity market. 2 weeks of gains potentially. Up 18 on the S&P 500, advanced in 0.5%, up 3% almost on the week. We're doing nicely here on the Nasdaq. Up 64, up another 0.6%. That's your equity market. That's your opening bell. Switch up the board. In the bond market, we look a little something like this on treasuries. Yields unchanged, all the 7s, 0.777% on a 10-year, briefly. Euro dollar, 118.14, down around about 0.5%. For the US dollar, up about 0.5% for euro against the dollar. Euro dollar 118.14 there. And in the commodity market, coming in about 0.5%, call it 0.4, 41 handle on WTI. That's the cross-asset picture. Another week of gains on the card with your movers at the market desk. Here's Abigail.
John, let's start out with some of the key mega cap tech and internet names that are helping the markets climb higher on this Friday and on pace for that big second up week in a row. Amazon is popping up about 0.4% as Mizuho has raised their price target to $4,000 per share on a potential third quarter beat. And that price target does imply that more than 20% upside is possible. Microsoft is higher amid a report that they may be considering allowing workers to work from home permanently. Perhaps a trend will be set there. Qualcomm's price target raised at Evercore ISI. The analysts saying that they are likely to benefit from Apple's 5G ramp up, and Tesla higher for a second day in a row. Now, where we see a real bid, John, is in the healthcare space, even though that sector overall up about 0.5%. But HCA Holdings, Tenet Healthcare, Universal Health, the hospital stocks higher as HCA Holdings has pre-announced to the upside. Analysts are encouraged also by the fact that their EBITDA beat, even if you don't include the emergency aid. So we do see a very solid rally here for these hospital stocks. Let's see if it continues and if it can help the healthcare sector go a bit higher on the day. Energy, as you know, the top sector right now, John, up 0.9%.
Abigail, thank you. Thank you very much. 1 minute and about 40 seconds into the session. Energy higher, up 0.9%. Materials, industrials, we're seeing this story all over again. The S&P 500 advancing 0.5%. Abigail mentioning Microsoft. A permanent shift to work from home if you want to. If you want to is the key part of this. Remember the unlimited vacation some of the tech firms would offer employees, and then there was a competition for who didn't take vacation. That's where the problems begin. We can talk about that another time. Global equities headed for their best week again since July. Investors growing increasingly confident of a Joe Biden presidency.
The prospect of a Biden victory and I think a sweep. Biden, to me, is both positive for the S&P and for Asian assets.
This is very much a blue wave, massive stimulus type of trade.
You have calmer geopolitics, and of course, if this is a Biden victory with the sweep, you're going to have much more domestic stimulus.
There's more comfort in the market with a Biden wave.
The price action across markets this morning is very suggestive to me of the sweep.
How misplaced is that comfort? Scarlett Fu joins us now with more. Hey, Scarlett.
Hey, John. Yeah, let's start with China, whose markets last traded before today back in September. And think of all the things that have happened since then. Of course, you've got President Trump's COVID diagnosis, the Biden wave, as your guest talked about, and multiple about faces on fiscal stimulus. None of that fazed Chinese markets. Stocks and the renminbi posted gains as they resumed trading. And if anything, the thinking is a second Trump term would mean more of the same Beijing-Washington tensions, while a Biden administration could potentially calm relations. And for now, the fundamentals favor China. Industrial profits are rebounding, and the latest Caixin Services PMI show that the economy is recovering and moving past the pandemic. By contrast, you look at the latest U.S. jobs report, which shows the labor market is struggling and we have a slowing recovery. Now, U.S. stocks are still the world leaders here this year, but with Asian stocks also back above their pre-pandemic level, there is some talk that it's time to rotate to Asian equities. Certain EM currencies are also set to outperform if you get a Biden victory. 4 years ago, investors were buying the ruble and selling the Mexican peso because then candidate Trump was favorable on Russia while threatening to cut ties with Mexico. That trade is moving in the other direction now. And Paul McNamara of GAM says that a Biden victory would mean a return to a rules-based global trade regime, which would benefit, say, the Chinese yuan and the Mexican peso. The ruble, if you look at it, is down about 8% versus the dollar in the past 3 months. A Democrat in the White House, the thinking goes, would likely impose harsher trade sanctions on Russia. John?
Scarlett Fu, thank you. Let's continue the conversation. JP Morgan's Monica DeCenso saying global equities are positioned to gain from a Biden victory, writing, quote, if Biden wins, he will inherit a challenged economy, but he'll combat that with continued stimulus, and it's unlikely that he'll engage in near-term tariff and trade wars. Global equities appear poised to continue benefiting. Monica, I'm pleased to say, joins us now over the phone. Monica, this is an important distinction that you're making, the presidency versus a blue wave. What the presidency could mean for international equities. Let's start there, Monica. Just build on that for us.
Sure. I will say, and your previous guest mentioned it as well, it does appear increasingly likely that we see a blue wave. And I think that is what the market is pricing in right now when you see equities continue to move, because if you only have a Biden win without, say, the Senate moving, it'll be harder for him to get more of the stimulus done. That is the underpinning of my view that you continue to see U.S. equities outperform, as well as global equities as well. So I really do think you probably need the blue wave for the real bullish outcome that many people are talking about to come to fruition.
Do you need the blue wave for the international piece of your call to work, Monica? The long China story, the long China currency story that I've heard from John Norman a little bit earlier on this morning. Do you need the blue wave for that to work?
You know, we have been bullish EM currencies, and our view is that you probably see the dollar weaken actually under either administration. And the reason there is, interestingly, whether Trump wins or Biden wins, you likely see continued deficit spending. And that will have a long-term impact on the dollar that could benefit other currencies like China. Now, again, if you do get the blue wave, I think that argues for that even more because you see more stimulus spending and you probably see less of the rhetoric and noise between the U.S. and China, maybe a little more tension with Russia. But I think you're going to see a U.S. that's moving more in lockstep with many other major countries. And I think that's going to be constructive for equities. Remember what Biden did with Obama back during the last crisis. We saw a lot of stimulus spending. And I think that's what we're going to have happen again for the U.S. to come out of this.
This pendulum has swung so quickly. The mood of this market just a couple of weeks ago, Monica, was about a contested election and elevated volatility into year-end. Monica, what changed for you?
You know, it's fascinating. Actually, at the beginning of the year, I was meeting with a lot of clients. And if you told people, not only do I think Biden will win, but that you'll see a blue wave, most people would have assumed the market would sell off in that scenario because they would have been worried about rolling back of tax cuts and what that means for corporate earnings. Fast forward 9 months, because of the impact of COVID, it's just unlikely that a blue wave has the same implications it would have before this happened. Because again, you're inheriting a more challenged economy, and so stimulus spending is probably what happens. Rates remain low for a very long time. That's a perfect backdrop for equities over the near to intermediate term. And so I think a lot of that is what's changed. Obviously, you've also had polls move. And I do want to caution you, we're still weeks away from the election, so this could change.
Yep.
Nothing is certain. And while volatility has come in, the market is still pricing in heightened volatility between now and the election, calling for like average moves of 2% a day. We haven't seen those kind of moves lately. So the market clearly thinks there could be some other noise before this is said and done.
Would you fade that volatility, Monica?
I would, because I think, you know, again, very hard to trust the polls, but we've been engaging in strategies that are selling that volatility to find a way to monetize it. I just don't think that you're going to see volatility realized the same way the market is expecting right now.
Just want to finish up with something you touched on at the start of the year in the conversations you had. Rolling back the tax cuts is still the plan. So, Monica, why is no one worried about it now?
You know, it's funny. I think the view is while you have that, and that is a negative for earnings growth for the next couple of years, it is offset with the benefit of stimulus spending. And so I think that's where you get into a more nuanced view, certainly of U.S. equities, where you should focus on sectors that would benefit from the stimulus spending and just stimulating the economy in general that might offset some of the impact of the rollback of tax cuts.
Where do you end up if you look for that?
You're probably going to look pro-cyclical, right? So you should be looking at industrials. They've outperformed the last few months. They probably continue to outperform. And then I still love areas like healthcare. I mean, you've seen all the headlines recently with all the moves towards vaccines and different treatments. And this is a sector that tends to be defensive and is innovating at the same time. And you have reasonable valuations with many large-cap healthcare companies. You get dividends. It's a great place to hide if you're a little worried but want some leverage to the innovation story.
Monica, lucky to catch up with you today. Got to get you back on the programme soon. Don't be a stranger. Monica DeCenso there of JP Morgan. Let's get to the market desk, shall we, and get you some movers. Here's Abigail.
John, let's check out some of the movers well beneath the surface, starting out with the shares of Wayfair. They are popping higher. This is William Blair has upgraded the stock to an outperform. They also have a price target that is higher. This, of course, on the company benefiting from this year's pandemic trends. This stock now up more than 230% on the year. Zoom is sharply higher, up 3.3%, getting a street high price target of $550 for Mizuho. This, of course, before the analyst day next week. And it's very clear at this point, John, that Zoom is not just a fad, but here to stay as this pandemic has really shifted trends. And then rocket companies up 2.3%. JP Morgan upgrading to an overweight from a neutral, setting a price target of nearly $29 per share. They see relative upside for the tech-driven real estate transaction company. And then, John, very quickly on this day's big stock story, Xilinx heading to its best day since January of 2019 on the possibility that AMD may buy its rival for $30 billion in a bid to help AMD beat its other rival, Intel. Lots of competition in that chip sector, and the stocks right now outperforming in a big way, up 1.8%, being helped out by Xilinx, John.
Abigail, thank you. Thank you very much. Coming up on this program, Europe stepping up efforts to force tougher restrictions amid a resurgence in virus cases. That conversation coming up next with Morgan Stanley's Sri Sarkaran. From London and New York, this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Could be on course to close out the week with a day of gains this Friday morning. We advance around about 0.6%, 13 minutes into the session, up around about 0.75% on the Nasdaq, doing nicely on the session and on the week as well. Over in Europe, stocks climbing as well, despite ramping up restrictions to limit the spread of the coronavirus. Spain declaring a state of emergency in Madrid. German Chancellor Angela Merkel weighing new curbs on the country's biggest cities, and new restrictions in the UK, potentially closing restaurants and bars, could be announced as soon as Monday. With your latest wrap from the continent, Bloomberg's Maria Tadeo joins us from Brussels. Hey, Maria.
Well, Jonathan, yesterday we talked about how new restrictions were coming, and today they are official. Spain is putting the city of Madrid into a state of emergency. That's going to be the case for the next 15 days. When you look at France, it has its three biggest cities now under major restrictions. And Angela Merkel, who was just speaking, saying that the next few days will be crucial to determine whether or not the second wave of infections can be curtailed and can be suppressed. What is interesting here, and it really caught my eye, is that if you look at the action in the market, when you look at stocks, when you look at bonds, there has been a rally and an outperformance of periphery bonds being led by Spain. You would think on a day like today, the Spanish 10-year would be under pressure, but it's not been the case. And this points to two very different dynamics. On the ground, we're looking at the infection rate, but when you look at what the market is looking at, well, they anticipate that one way or another, there is going to be more stimulus. They anticipate that the European Central Bank is also going to have to take measures come December. And they also look at this and say, you know, for the time being, central governments and governments across Europe are sticking to their words. We're not going to see a national lockdown. This is very targeted. This is very regional, even though we are seeing the numbers go up. So it's a very different dynamic when you look at the numbers, when you look at hospitals, and when you look at the market action happening in Europe today.
Maria, thank you. Dare I say, the Spanish and Italian bond market starting to behave like a sovereign debt market. again. It's taken a while. Morgan Stanley's Sri Sankaran saying the rising case count in Europe is concerning, saying, quote, it could dampen the economic recovery, but it seems likely the amount of liquidity on the sidelines is reflected in the market's willingness to look through a short pause in the V. I'm pleased to say that Sri joins us now on the phone. Sri, fantastic to catch up with you, sir. Let's just start with a very basic question. The outlook for credit right now on the continent, is it driven by the ECB or the fundamentals on the ground?
I think it's very much, thanks for having me, John. So, yeah, the market price action very much driven by technicals. As Maria pointed out earlier, in the sovereign bond markets, you see that in credit markets, it's a theme of compression that's playing out even in Europe. So the message here would be that, yes, the fundamentals do matter, but the thought process of the market seems to be that they're willing to look through the near-term deterioration in fundamentals, because on the back half of it, it is going to be an environment where rates are lower for longer. There is enough of fiscal and monetary stimulus. And particularly in the case of Europe, I mean, you do get the expectation that the PEP package is going to be scaled up going into the end of this year. Our economists also brought it forward from early next year. And at the same time, from the fiscal side, it does translate into more impetus for some degree of collaboration. And to that extent, all this is translating into this compression dynamic and peripheral bonds behaving more like sovereign bonds, as you mentioned, and also within credit, some of the weaker portions of the market trying to kind of pick a bit now.
Sri, you mentioned fiscal policy. Let's just touch on that briefly. It's clear to me in the last several months that we've drained away some of the redenomination risk in the sovereign debt market. You mentioned the periphery, Greece, Italy, Spain. Times in a market where typically over the last several years, the last decade, when there was stress, we'd expect those markets to sell off. They're not anymore. If that part of the sovereign debt market is starting to act like a sovereign credit and not just a credit, Sri, do you see any of that being reflected in some of the domestic markets in corporate credit, now that the sovereigns are starting to look like sovereigns again, at least for the time being?
Yeah, so I think the whole corporate bond purchase program, that took away some of this peripheral premium within the corporate bond market. So in this leg of this rally or compression theme, it's much more about credit quality, and that has been the case since the ECB started its corporate bond purchase program. So I do look at that as the pivotal point with respect to when corporate credit markets started focusing less on the sovereign risk and the peripheral risk, but more on the fundamental dynamics and the technicals of the purchase. And at the end of the day, I mean, the ECB purchase programs and the overall dynamic around money on the sidelines does translate into a very strong technical dynamic, and that's kind of what's driving this compression dynamic, rather than one where corporate bond markets, yes, they do focus on fundamentals, but it's not really about the sovereign risk as such. And arguably, if peripheral government bonds also lose some of that peripheral premium, you should see the case for corporate bonds, particularly high yields, start to pick up even more.
I just wonder, Sri, what the trade is then as I look into corporates. Is there something to look at in the bank sector, in the financial sector?
Yeah, I mean, we're still kind of comfortable with the credit portion of the market. Preferences for staying down in quality within the non-financial component. We do have a preference for financials over non-financials across both U.S. and Europe. And at the end of the day, I mean, the down in quality view is driven by the expectation that looking through the near-term concerns, it's the reflation dynamic that's going to anchor markets. And to that extent, it does make more sense to take on credit risk by going down the quality spectrum rather than going out the duration curve. That's probably more true in the U.S., but the near term, the magnitude of the rally that we have seen in Europe has been a bit more muted than what we had in our forecast. So there is a bit more upside on the European credit leg of the story. And within that, we still maintain a down in quality bias, and we would kind of own financials over non-financials.
Well, Sri, it's the reflation trade in Europe I wanted to get to. I think, including Morgan Stanley, the trade at the moment for many people seems to be short treasuries, long bunds, reflation being a much more prominent theme in the United States than, say, in Europe at the moment. And the bund market and the way that's priced right now really speaks to that. Sri, reflation in Europe, can you speak to that a little bit? Where's the hope come from?
So to be clear, our economists, Jacob Nell and team, they do think that, one, with respect to the growth dynamic, the lag between U.S. and Europe is going to be much shorter this time around than the financial crisis. The initial leg of the recovery has been stronger in the U.S. because the Fed had much more kind of power to cut rates than the ECB. And even on the fiscal side, there was more stronger response initially from the U.S. But now that those actions have normalized, on a looking forward basis, they think Europe comes back to this pre-COVID levels of output by the early part of 2022. For the U.S., it's middle of 2021. So that's almost like a 2-quarter lag versus the 5-year differential that we saw for Europe to recover versus the U.S. And the optimism is in part driven by the aspect of the next leg of it could have been sovereign concerns and so on, and that's no longer the case. And the policy response has been pretty strong, and corporate credit is a part of the overall playbook as well. So the bottom line here is that inflation probably doesn't normalize as quickly in Europe, but at least the growth narrative doesn't lag too much, and that's kind of contributing to some degree of optimism even on the inflation front.
Sri, I could talk to you all day. I've just got one final question, if we can put a bow on it, if we can. We had the income shock. It wasn't an income crisis because fiscal stepped in. One thing we haven't had that I think some people are surprised at is the balance sheet issue, where you start to see the C-suite really take a hold of things and start to deleverage. Where's the deleveraging, Sri? It's been an odd economic downturn without it. In fact, people have leveraged up. They've taken on more debt. What's going on?
Yeah, that is an important debate, and that could go on for another show altogether. But the message there is that for now, the C-suite or corporates in general are still focused on shoring up liquidity. So what you see is cash-to-debt ratios continue to improve across the board and across the quality spectrum and across regions on the corporate balance sheet side. It does translate into very high degrees of gross leverage, but the increase in net leverage has not been as damaging. I think the next leg of it, which is what we're framing as the early cycle playbook, is that once you get this involuntary re-leveraging, you do get the focus to bring down the corporate debt balances and so on, and that leg of it is going to happen. We see that happening in the early part of next year. Once the recovery momentum gathers and companies are more convinced that they have enough liquidity buffers, that's when they'll start using that to bring down quantum of debt and to improve their credit metrics. I think we're a little too early to see signals of fundamental improvement.
We can have a whole conversation about this the next time you come on. I promise you, Sri. Great to catch up. Really, really smart. Sri Sankaran there on the latest in the credit market in both Europe and the United States. In this market, equities up with a sector price action. Here's Abigail.
John, we are looking at mildly risk-on action here sector-wise with the markets higher. If we use the IMAP and the Bloomberg terminal, you will see most sectors are higher for the S&P 500, most of them by more than 0.5% at this point, led by tech. Now, on the week, it's super interesting. What we're looking at here is energy on top, then materials, utilities, even with yields higher, those utility dividend stocks are also higher, and then the industrial. So nice cyclical tilt on the week with the S&P 500 heading to its best week since July 3rd, John.
Abigail, thank you. Coming up next, the market moving events you need to be watching. That'll be next in our trading diary. From London and New York, this is Bloomberg.
Welcome to That's Debatable, an interactive series on today's most pressing issues. The resolution this time, is it time to redistribute the wealth? Two perspectives.
Pointing to billionaires and saying we should take their money away is ineffective political strategy.
We have a choice in this country, either great wealth in the hands of a few or a democracy.
I'm John Donvan. Join us for That's Debatable, presented by Bloomberg and Intelligence Squared, Friday at 7 p.m.
valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
"25 minutes into the session, equity markets just trimming some of the gains, up about 0.5% on the S&P 500. Your trading diary, what you need to be watching through next week into the weekend and coming out the other side. The US bond market closing on Monday for the Columbus Day holiday. We get US CPI on Tuesday, plus big bank earnings kicking off with JP Morgan and Citigroup reporting before the opening bell. Then it's Bank of America, Goldman Sachs reporting on Wednesday, plus we get US PPI and Fed Vice Chairman Richard Clarida will be speaking. Morgan Stanley reporting on Thursday, plus another round of initial jobless claims. And finally on Friday, we get US retail sales. That's the data for the week ahead. From London and New York, that does it for me. For our audience worldwide, this was the Countdown to the Open. Continue the conversation at Twitter at FerroTV, with an equity market playing fiscal headline roulette going into the weekend. This is Bloomberg.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food, they're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water, and it's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá? I'm asking about why he's alone right here. He said things in life happens, you know. I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji you use the most to send to each other?
So there's a bear which basically we use for indicating a hug.
Yeah, that's our language basically, bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue, and it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
Her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a Juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry city?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname
Pocahontas.
Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
Okay. In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
That moment became something that's on T-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you.
Millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Sadiq Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law, with its swagger and ill-fitting suits, caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
There was just explosions, and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty. The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
There's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and it was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hack emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped at the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
When people think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia. Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for
Anatoly Sobchak, who was then the mayor of St. Petersburg.
That's Leonid Bershidsky.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I am currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFall.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends.
But they probably miscalculated, thinking that they could easily find a way to influence him. It became impossible almost from the start.
And from that very moment, there was warfare between him and the oligarchs.
That's when Putin gave the oligarchs a choice. Putin's way?
Some of those people from the 90s managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. That Yeltsin line, take good care of Russia, that's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
Putin never left power. He pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the U.S. that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead up to the 2012 election, it was widely believed that both the presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, and this is his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin. Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low, and America played down Russia's influence, with Obama calling Russia
a regional power.
Despite all of that, Putin's approval rating remained sky high, and then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea, and similar views on NATO and sanctions.
Secretary Secretary Clinton didn't support any of those views.
Even though Putin denies any wrongdoing,
U.S. elections.
Yes.
the U.S. has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which many say helped Trump beat Hillary Clinton in the presidential election. Which leaves us here, with the possibility of a President Putin until 2024, positioning Russia to be the world power he always imagined it should be.
Jack Ma is Asia's richest man and most recognizable business tycoon. He's the chairman of Alibaba, China's e-commerce giant and one of the 10 largest companies in the world, yet he still wants more.
We know where we're going. We want to be the 5th largest economy.
Big words from the man some call Asia's Jeff Bezos. He's confident, he's charismatic, and he's definitely not the average CEO. This is how a poor schoolteacher went from the classroom to being one of the most influential multi-billionaires in the world. Ma was born in China's southeastern city Hangzhou in 1964. His parents were traditional musician storytellers. As a teenager, he started to learn English from foreign tourists after China opened up in the late 1970s.
And then for 9 years, Jack Ma hung around outside the Hangzhou Hotel, which is now called the Shangri-La. He would get up at 5 a.m. to talk to travelers.
That's Bloomberg technology reporter Lulu Chen.
And I cover China Internet for Bloomberg.
Ma failed China's National University entrance exam twice before being admitted to local teachers' college. He graduated in 1988. He applied for 30 jobs and got rejected, including from the fast food giant KFC.
When KFC come to China, come to us, say,
24 people went for the job. 23 people accepted. I was the only one guy.
Then Ma got a job at a local university and taught English there for about 5 years, earning just $15 a month. On the side, he started a translation company with several friends. During a company trip to the US in 1995, Ma had his first encounter with the internet at a friend's place in Seattle.
I searched the first word, beer. I don't know why, because it's easy to spell, baby. And I see beers from Germany, beers from USA, beers from Japan, but there's no beer from China.
So he searched for the word China instead and still couldn't find anything. And that got him thinking. He wanted to build something that would put China on the world's map.
He started China Pages, a Yellow Pages-like website, but it didn't take off. Then Ma joined a government agency in Beijing to help set up a website. By 1999, the internet stock boom had gripped Wall Street, and back in his Hangzhou apartment, Ma decided to try again. With his wife and a group of friends, Ma raised $80,000 and set up Alibaba, a site that allowed businesses to sell stuff to each other.
人家美国人强就强它的硬件，强就强它的系统建设，这方面确实比你早。但是玩信息玩软的，中国人的脑袋绝不比他们差。我们在座的所有人的脑袋绝不比他们差。
By 2000, Alibaba had raised $25 million from investors, including Goldman Sachs and SoftBank.
He had no business plan and zero revenue, but his eyes was very strong eyes.
In 2003, Alibaba started Taobao, a platform for individual sellers to trade with each other, and publicly declared war against eBay, who had started to make a foray into China.
Jack Ma has this famous saying that Alibaba is a crocodile in the Yangtze River, whereas eBay is a shark in the ocean. And if they fight eBay in the ocean, then they'll lose. But if they fight them in the Yangtze River, then they have a home base advantage.
In 2007, just 1 year after it forced eBay out of China, Alibaba debuted its business-facing division on the Hong Kong Stock Exchange. But it delisted 5 years later as its performance sagged. But in 2014, Alibaba raised $25 billion in the world's biggest IPO in New York.
Everybody should have a dream. What if that dream comes true?
After achieving dominance in the business of e-commerce in China, Alibaba has been building an internet empire worth $472 billion, with businesses in cloud computing, online video streaming, movie production, healthcare, sports, retail, and even news media.
Alibaba buying into South China Morning Post really raised eyebrows. This is the largest English newspaper in Hong Kong, and it shows that Jack Ma's ambitions weren't limited to e-commerce. He wanted to influence not just Chinese users, but also overseas users as well.
The US has criticized Alibaba for allowing companies to sell counterfeit and poorly made goods, but in China, it enjoys the favor of China's government. It's part of Ma's company philosophy.
In love with the government, but don't marry with them.
Jack Ma is an extremely fortunate man for jumping on the internet sector so early. Note that this is a person who has no coding skills at all. He's a natural showman and a gifted public speaker, and really able to convince others to believe in his vision.
Ma's vision of growing Alibaba to be the world's 5th largest economy faces strong competition at home and abroad. It will require more than just naked ambition and charisma, but Ma is great at getting himself in the right place at the right time. So far, it's served him well.
Peter Thiel is a walking contradiction. He got his bachelor's and Juris Doctorate from Stanford, but speaks out about the horrors of higher education, saying college is
as corrupt as the Catholic Church was 500 years ago.
He's a staunch supporter of the free press, yet he bankrolled a lawsuit to bankrupt an independent media company.
But these were not journalists.
And most of all, he's an immigrant libertarian who's the most public supporter of Donald Trump in all of Silicon Valley.
What Trump represents isn't crazy, and it's not going away.
This is the story of how an openly gay, immigrant genius, libertarian billionaire went from tech contrarian to Silicon Valley's biggest Trump supporter. Peter Thiel was born on October 11, 1967 in Frankfurt, West Germany, to Suzanne and Klaus Thiel. Peter's family emigrated to Cleveland, Ohio when he was 1. An Ayn Rand devotee during his youth, Thiel attended Stanford University majoring in philosophy.
His Stanford experience shaped a really big part of who he decided to surround himself with.
That's Lizette Chapman.
And I cover technology and venture capital here at Bloomberg.
He and his Stanford friends made their first big splash in tech with PayPal. After selling to eBay for $1.5 billion, they would become known as the PayPal Mafia for each incredible success after PayPal. For Thiel, that began with an early, modest $500,000 investment in Facebook.
And in VC speak, early means big risk, but also big reward. He turned that initial $500,000 investment into more than $1 billion in cash.
But Thiel was just getting started with Facebook, and he went on to make a whole bunch of wildly successful investments.
From SpaceX to Airbnb to one of the largest, most powerful companies in the United States, if not the world, and of course that's Palantir.
The incredibly controversial secretive data mining startup he founded with his colleagues from PayPal. It connects data silos and then allows non-technical people to search that information for patterns. Data like
financial information, feeds from video cameras, biometric details, passport information, flight manifest.
Palantir doesn't talk much about how they collect this data, who has access to it, or what they do with it. But they have contracts with
the Department of Homeland Security and the CIA and the Department of Justice and the Securities and Exchange Commission
and several other federal agencies. It's the richest company you've never heard of, valued at $20 billion. But there are plenty of obscenely wealthy people in Silicon Valley. What makes him different...
He's a complex ball of multiple contradictions.
Take college, for example. Even though college was extremely important for Thiel, there's something called the Thiel Fellowship.
In exchange for dropping out and a promise not to pursue college, Thiel would give them $100,000 each.
You basically tell people that if you get a diploma, you're saved. Otherwise you go to hell. You go to Yale or you go to jail.
Also, his relationship with the press.
Here's another contradiction. He's donated to free press initiatives, including the Committee to Protect Journalists.
But he also secretly spent tens of millions of dollars bankrolling a lawsuit filed by Hulk Hogan over the publication of a sex tape and bankrupting the independently run Gawker Media. Why did he do this? Because in 2007, one of Gawker Media's blogs, ValueAg, outed him as gay. And with the lawsuit, he
found an opportunity to get back at them by funding the lawsuit that Hulk Hogan was able to bring then, but he wouldn't have been able to do that without Thiel's money.
And finally, Thiel's biggest contradiction, his endorsement of Donald Trump.
When he was asked about his support for Trump, he was surprised at the outrage that came with it from many of his colleagues in Silicon Valley. He didn't want more of the establishment.
No matter how crazy this election seems, it is less crazy than the condition of our country.
After briefly supporting Carly Fiorina in the primaries, Thiel pivoted to Trump, donating $1.25 million to Trump and his associated super PACs in October 2016. And he didn't just help Trump financially. He gave a full-throated keynote speech supporting Trump at the Republican National Convention.
I'm not a politician, but neither is Donald Trump. He is a builder, and it's time to rebuild America.
And when Trump was finally elected, Thiel was given the reins to an enormous amount of power.
And I want to thank you, man. You have a very special guy.
He was named the transitional advisor. And in that role, he did a lot of interviewing and a lot of vetting to fill hundreds of cabinet positions and different jobs within the administration.
But it turns out Thiel's support isn't unconditional.
Talking to people who spend time with him, I have also heard that he is no longer a great supporter of Trump.
It was reported that Thiel was unhappy with the direction of Trump's presidency. Ever since, he's been mum, making no public appearances, no statements, and staying out of the spotlight altogether. Although there have been suggestions that Trump could tap Thiel for a top intelligence post or ambassadorship, there's no indication he'd accept.
He's described his relationship with politics as schizophrenic. He gets really involved, and then he runs away as fast as possible.
Whether Thiel takes a new position or simply continues as a board director at Facebook and Palantir, at just 50 years old, he's primed to wield some serious influence in technology and politics for decades to come.
Two 2016 was again the hottest year on record, and the previous 17 years have seen our 16 most scorching. Scientists overwhelmingly agree. Global warming is the culprit. And it's just getting started. Ice caps, extreme weather, wildfires, droughts, and the hits keep coming. What are we doing about it? In 2015, the world took its boldest step yet to stem climate change with a historic accord in Paris. But now comes the hard part. Nations must change energy policies and invest huge amounts of money, and they will likely do it without the United States. President Donald Trump announced on June 1st that the U.S. would withdraw from the accord.
The reality is that withdrawing is in America's economic interest and won't matter much to the climate.
Here's the situation. Decades in the making, the Paris Agreement united the U.S., China, and more than 190 other nations in a push to limit fossil fuel pollution. The UN-sponsored plan secured pledges to cut greenhouse gases, the emissions that trap heat in the Earth's atmosphere, in an effort to avoid the rising seas and other environmental disasters that climate models predict. But even if all pledges are met, the globe is expected to warm by as much as 3.4 degrees Celsius this century, more than the UN target of well below 2 degrees. Meeting the Paris Agreement means that governments will have to offer more incentives for clean energy, scale back support for fossil fuels, make emissions more costly, and reduce deforestation. It's estimated that the deal will require $13.5 trillion of spending through 2030. Here's the argument. Unlike past climate pacts such as the Kyoto Protocol, each country set its own Paris targets and then promised to revisit and improve them. The U.S. was primed to play a lead role in climate change, but Trump's Energy Independence Executive Order reverses Obama-era rules and directives put in place to combat climate change, and expands production of coal, the dirtiest fossil fuel. The resulting policies threaten the global fight against climate change. Without the U.S. commitment to emissions reduction, other countries may join it in abandoning the Paris Agreement. This could make it almost impossible and even more expensive down the line to stop climate change. Optimists argue that the shift to a lower carbon future is already underway. Businesses, cities, and U.S. states, such as California, are already investing in wind and solar and taking other steps to make it work.
I've actually been called an environmentalist, if you can believe that.
There's an inherent attraction to light and being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. Origins of the creative content of a lot of the work at Lightbright comes from a variety of sources. Sometimes people come with a napkin sketch, some people come with an Adobe Illustrator file, and we have a whole design team who then we kind of work together to help create layouts of what it might look like. Scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. It turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress, and sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature, and it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I think I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I've learned so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me at this point. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is opened, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off, and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube, and we evacuate that out. We introduce the gas into it, and we seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when I see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating that takes that one wavelength of light and emits a different wavelength. We bring it over to the aging table where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled into place. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it. To me, is this insight into the inner workings of the universe. It literally is. It's a way of looking at what is surrounding us in the cosmos in a new light.
It's a bit like an addiction. You've got to make something, you have to do something. It's borderline obsession. And every bike we build is my favourite bike at the time, and as soon as it's done, I want to build another one. Sven cycles is something I've been thinking about ever since I started cycling in my late teens. We want bikes that ultimately you'll really enjoy riding. There's never a bike that's the same. There's always a slight change. And as we build them individually as well, they have the marks of a bike that's built by hand. Most people I know cycle have an idea of their dream bicycle. And it may be an evolving idea you've had in your head. And we've worked with a lot of people that have come to us with sketches and scrapbooks. It's really, really nice to build something that's just one-off and unique. I think a lot of people see a bicycle as two wheels and a frame in the middle. There are a lot of subtle changes and nuances in design which can change the riding characteristics quite dramatically. I'm a really big fan of modernist architecture, and the simplicity of a modernist building is really hard to achieve. And with some of our bikes, they may look very simple, but I think people should not underestimate the time and effort that goes into designing a product. Tubing is key to a bike's feel and ride. Reynolds tubing has been in my life ever since I can remember. Growing up, I could never afford a frame manufactured with their tubing. We can now put a badge on our bike saying manufactured Reynolds, which is a sort of thing as a kid I just wouldn't have believed was going to happen. Every part of the bike has a specific tube. It's not universal. The first thing we do is get the tubes out, check they're correct, check the wall thicknesses, sand the edges, make sure it's all really clean, because if it's not clean, the tubes won't join together correctly. We build in steel because I still believe it's one of the best materials to use. It's been used in bikes since the late 1800s, and they're still using it now for a very good reason. It's the flexibility that we can replace the tube, repaint the bike, and you wouldn't know it's damaged. I just like working with it. It's very sculptural. This isn't sort of aerospace precision engineering. It's a steel rule and a marker, so when we're cutting the tubes, it's within a mil or two. But what we're trying to do is take the best from bicycle building in the past and add a little bit of modern flair to it. There's various techniques for building bicycles. We do a thing called fillet brazing, where you connect a pipe together. We use a bronze rod and a flame. We heat the tubes up to the same temperature and we fill the joint with bronze. And it gives a very, very sort of fluid, lovely, sort of quite sculptural feel. You've got to practice, you've got to be able to judge material temperatures, you've got to just look at it and you just get a feel for it. It's a stage where your tubes start to look a bit like a bicycle. My father's a jeweller. He'd make sort of very pretty things, which are lovely, but for me, they don't really have any function. What I love about bicycles, you can start on a Monday with a box of tubes, you can be riding it by the weekend, and it can last you for the rest of your life. Outside of the frame and forks, the other most important part is the wheels and tyres. When you build the wheels, you have to lace them, so there's little holes going all the way around the rim. You poke the spoke through. We do build all our wheels by hand here because a machine can't get 30 years worth of wheel building experience. Colour is very, very personal. With any of our bikes, you can have them painted whatever colour you want. We've matched one to a teapot, so we can get that scanned and we can match that, or someone's favourite item of clothing. I like to let the bike sit for 4 or 5 days minimum, just so the paint can have time to cure a little bit, and then we assemble it. We get out all the new components, and it's a case of putting them together. Some bikes you can assemble in 3 hours, some will take 3 days. And we've built bikes that cost in the £10,000 plus mark. Some people, they're saving up and this is their bike and they're going to own it for the rest of their lives, so we just want to make sure they get the right thing. I think the bike for me was the first time I had some freedom, so as soon as I had one I was off. A lot of people still get that thrill as when they were a kid blasting down a hill, wind going through their hair. It's fun. Everyone has their favourite jacket or something that just makes them feel good. If you've got a bike that fits well, you actually feel part of it. Building bicycles as a creative outlet is fantastic. It's not something you do because you're going to get a big paycheck at the end of the day. You do it something you have a passion for it.
If you ever saw a wooden surfboard, it was probably hanging in somebody's house or underneath the deck. But kind of in the last 10 or 15 years, wood has made a big comeback. They surf wonderfully. It's beautiful and it feels great to be on one of them. I always had a love for wood and kind of passionate about things that went in the water. I've kind of been around wooden boats most of my life. There's just so much character. The way they're built, the stories that come with them, a lot of that has translated over to why we build surfboards the way we do. When we first started thinking about building surfboards, wood was the natural material we chose. They have a very high strength to weight ratio. Wooden surfboards have the longest history of use in the surf world than any other material. People have been surfing wooden surfboards since kind of the first documented history of people riding waves. The board starts in CAD, where we take a 3D model, break down the shape, and kind of create frames and templates and all the inner parts of the board that we get cut on a CNC machine. We take those frames and we just pop them out, assemble the frame into kind of a skeleton. We go out to our lumber shed, pick a bunch of cedar, and bring them into our mill shop, put glue along the edges, clamp it all together into a panel. Everything's book matched, you have symmetry in the colors and texture of the wood. Cut your outline. take our assembled frame, gently put it down right on top of the plank. Once that foundation is started, you're basically building up the three-dimensional shape, the outside part of the board, using lots of strips that kind of interlock and fit together. Every piece of wood is going to be different, and it's all going to react differently. There are frustrations with it, but I think that's one of the things that keeps it challenging. You learn to read the kind of what the grain lines are doing and what the color of the wood is telling you. Once those rails are cleaned up, we put our top planks on. It's a little bit like putting a lid on a box. It's like, this is it. Whatever's inside that board is staying inside that board. And by tensioning some rope, you can clamp the two together. It's like a time capsule. What makes our boards unique are they are built right here in York. They're built using material that grows right here in the state of Maine. They're built 100% by hand by local craftspeople and surfers. There's a lot of time that goes into these boards, between 40 and 60 hours start to finish. We wanted to build surfboards that were as hollow as they could be, but still be strong enough to work well. Too light and they don't surf well, but too heavy and they don't surf well. So there's a balance point there, and that's where we try to be. Taking the board off the rocker table, once the top has gone on, that is by far one of my top favorite parts. It's just you and a shaping stand, a board, and a hand plane. Everything else is out of your view. It's simple, it's pleasurable, it's quiet. You can be with your thoughts and you can just kind of be present. There's something about taking a nice sharp edge tool to a beautiful piece of wood and feeling the curls coming off and knowing that every pass that you're making, you're kind of getting it closer and closer to what you have in mind. Once we've shaped it down and the board's looking like it's supposed to look like, time for it to go into the glassing room. 4-ounce fiberglass, laying it over the board, draping it over the edges, cutting it, applying epoxy, and on the board. Once both sides are lamb coated, it's time to put in the hardware. Drill and router and install the fin box. And on the other side, we drill and put in the leash plug and a vent. There's a lot of air just naturally inside the board, and that air wants to expand and contract with temperature changes. And that vent has a little piece of Gore-Tex fabric in it, and it allows air to kind of breathe both ways, but it doesn't allow water to get in. Once all that hardware is put in, it goes back into the glassing room. We brush a nice, beautiful, thick coat of epoxy over the whole surface, and that we call a gloss coat. That's supposed to look beautiful and glossy and shiny and flawless. You get to see that board come to life. Whatever the colors in the wood, they really come out. It just makes it look like candy. You just want to touch it and run your hands down it, and it's just kind of the icing on the cake. Once everything is hard, we put it into what we call the oven, get that epoxy to cure, really kind of bake it, and just get it to harden. Put in the fin, screw in the vent, and ship it out. We just love the idea of building something that's sustainable and long-lasting and made by hand. Kind of gives you a deeper connection to the product over something you might buy on a shelf. When a customer gets the board, they feel it. They 100% feel the amount of work and the amount of passion that went into the board. So I'm not really looking at hours and efficiency. We're looking at like doing it right and enjoying it as we go.
Ma Baoli, better known as Gang La, is one of the 4 Grand Marshals leading New York's Pride Parade this year. But in the country he comes from, being gay is still a social taboo. The CEO of a Beijing-based internet company is on a mission to improve the lives of millions of gay men in China.
对于每一个 LGBT 人群来说，即使这个国家不允许你跟同性爱人结婚，但是你仍然要勇敢地去选择你自己的生活，你仍然应该拥有幸福生活的权利。
Ma's company Blue City runs an app and a website specifically for gay men. Blued is one of the biggest gay social networking apps in the world, with an estimated 30 million registered users. Unlike most other apps, Blued is more than just dating or hookups.
大家可以在我们这个软件里面找他自己的情感，然后可以阅读相关的内容，然后可以进行一些娱乐，比如玩游戏啊，比如看直播啊等等。
Back in 2000, when Ma studied at a police school in northern China, he realized he didn't feel like everyone else.
因为他们都找女朋友，然后谈恋爱，但是我对长得好看的同性的男生，我反而觉得对我更有吸引力。所以那个时候我就到互联网上去找这样的一些资料，然后希望能够告诉我自己，我到底是谁。互联网上所有的信息都是负面的，都是错的，就是说同性恋要电击疗法，要被治疗，然后要吃药等等。
After visiting some foreign websites with different attitudes to homosexuality, Ma created his own site for a Chinese audience, encouraging people that
他们也是正常的，他们不用自卑，然后也不用自杀。
Even though attitudes towards homosexuals are slowly changing in China, it's still a social stigma. The virtual world of Blued, where members can be open about their sexuality, is for most a striking contrast to their real lives. This is live streaming, a function added to Blued in late 2015, right as the internet craze was starting to take off in China. Many self-made stars like Jin make decent amounts of money by receiving audiences virtual currencies and gifts.
我们不是彼此的初恋，初恋这种事儿多不靠谱啊。
For Kyle and Klaus, a couple who have come out, live streaming on Blued means something different.
其实我经常会收到很多粉丝的一些互动的留言，就是类似就是说你们让我们看到了同志情侣之间的一些希望啊，我看到这样的留言我是很欣慰。
The government's rules for acceptable content online may shift quickly in China, with LGBT material in a grey area. Many companies feel the chill of the recent internet crackdown, but Blue City still runs as usual. Ma has won the Chinese government's trust by helping with HIV prevention among gay men. A third of the company's staff are dedicated to screening pornographic and politically sensitive content.
我不太多的愿意去对抗，我更多的愿意去对话，去改变他们的想法。我觉得这个可能在中国来说是更有效的。
In the past 5 years, Blue City has grown from a team of 7 people to a promising business with about 250 staff. Ma said the company earned over $15 million last year, mainly through advertising and selling virtual currencies to live streaming audiences. Now the company is expanding overseas.
我希望吧，通过我们的努力，Blue能够成为全球第一家在美国纳斯达克或者是纽交所上市的这样的同志互联网公司。
This is Rich Chiga. He's a Chinese rapper by way of Indonesia, and he's very popular on the internet. This is Joji. He's a Japanese-Australian singer, and he's also very popular on the internet. Plus, Joji invented the Harlem Shake meme. Let me say that again. This guy, Joji, in the blood bathtub, invented the Harlem Shake meme. But we'll come back to that. So Rich and Joji are both signed to 88 Rising, an entertainment company hoping to build a lasting global brand that will outlive singular moments of virality. They primarily create content combining Asian culture and hip-hop, a formula that apparently pleases the internet gods greatly. They've only been around for 18 months, but they're already putting up major label numbers.
I think that we have an unprecedented collective of talent, a group of predominantly Asian artists, really making waves globally, which from an independent point of view as well.
88's founder, Sean Miyashiro, cut his teeth launching Vice's electronic music channel, Thump. But quickly, Sean became interested in life beyond dance music.
I knew that after launching a whole content platform that I have kind of the ability and the know-how to do it again, but for what was the question.
So Sean moved to the Bronx to start over and figure it out. He couldn't afford an office space, so he worked out of his car at the top of a grimy parking garage.
Everything kind of started here. If you look around, this is my environment. This is my serenity, really. 88 Rising was built here. Built on the grounds of LA Fitness, residence in a parking garage. I was living in the Bronx. I'm just like, damn, where the hell do I go? So I just come up here and I just kind of figure things out every single day. Being like, okay, what the hell is this thing? Coming here was kind of like my own kind of private office, basically. To be honest, I would even go to the bathroom here. I would take pisses here, you know what I mean? It's just too far to go back down there. When I need Wi-Fi, I'd spend a good part of the day at Dunkin' Donuts. Hi, how are you? Can I get a chicken snack wrap?
Before 88 Rising officially launched, Sean caught a surprise break in the form of a Twitter friendship with a funny 16-year-old kid from Indonesia named Brian, who taught himself English by watching Rubik's Cube tutorial videos on YouTube. Seriously, that's true.
I thought his Twitter was genius, from the future, just crazy, and just the shit that he was saying, the memes he was making. But I didn't know that he rapped or anything like that. I really didn't, and he came up with that stick 2 weeks later.
Dat Stick was Brian's first ever attempt at making a rap song, and it immediately went viral.
Everything was great about it, but the one thing that I noticed is the song was hard as hell. Just everything about it, man. Just it was menacing, bro.
Soon after the video dropped, Brian signed with 88 Rising.
I'll FaceTime with Rich. Sorry for calling you Rich Chiga on my phone, Rich. Brian, he gets super pissed off that he's saved in my phone as Rich Chiga. He's like, dude, am I not a human to you? What's good, bro?
What's good, brother?
How you doing?
Doing great. I did the sound check.
How was it?
It was tight.
So, Brian could definitely rap, but some viewers understandably took offense at a Chinese kid satirizing rap cliches and calling himself Rich Chiga. But if a group of well-known rappers saw the video and genuinely liked it, that could at least help validate Brian as a legit hip-hop artist. Plus, it could be really funny.
It was just kind of an idea that I just had on the spot. Everything that rappers say is better and funnier and smarter and wittier, and it's just more entertaining. We just edit it as tight as possible, put it up, and it really worked.
Yo, this nigga got a pouch on and a Reebok pouch.
This is the hardest nigga of all time.
He said, when you come for a chigga like me, that was dope.
It's just lit, and I think people will take it as a joke at first, but it's like if he ran with that and kept doing more videos like that, it's just lit.
You know, I'd never been to America before, and like all of a sudden, just like I see like all the rappers that I listen to just like reacting to my stuff, and I was like, what? How did this happen?
The reaction video also went viral, and even led to a remix of Dat Stick featuring Wu-Tang's Ghostface.
I'll get on that track. You know what I'm saying? Yeah.
Really, on the remix?
Yeah. Oh, you know him?
And yeah, the remix went viral too. Brian has since acknowledged the misstep in his name and claims he may change it. But for the time being, he's still Rich Chigga to his fans. An ever-growing global audience, hungry for more releases from emerging talent around the world.
I didn't know that it was gonna be this impactful and this important to people, and I'm very thankful and blessed that it has. And every day now that I wake up, it's like it's just like a new mission every day.
A major part of that mission involves Joji. Remember the bloody bath guy? He's a former YouTube personality in the middle of a career transition.
The sound of this song, Will He, it's like a trap song that you can like slow dance to. Awkward prom shit, you know what I mean? I used to do crazy episodic internet videos. It was going well, and one day it was me and a few friends just in a room. We were casually chilling, and then someone plays the song, and it's brand new at the time. I happened to have a lot of costumes laying around, so I told the other guys, I was like, get in these costumes and let's just dance to it, like who cares? We were like, okay, let's just go crazy at the drop. So that video goes up, I go to sleep, and the next morning, everyone's doing it, like next morning. That taught me a lot about the internet, how people want to just be a part of something. And from that point on, something changed, and I was a little better at understanding demographics and people and what they want to see and what they want to hear. I was friends with a couple other artists who were affiliated with 88, and then I also started to realize that 88 is the bridge between Western and Asian entertainment, and I really wanted to be a part of that.
Joji just released the In Tongues EP, his first project as a serious artist.
Joji's In Tongues record came out a couple weeks ago. It's #2 on Billboard on the R&B charts, which is crazy for independent release, and he's like a brand new artist.
And the success is even more impressive, knowing he went from creating something like this,
It's just Taco Bell, what could possibly go wrong?
to creating something like this, the newest music video for his song Demons. Tonight, Rich Chigga has a show in New York City. Tickets sold out in an hour.
I came here, I'm first online. I was here at 1. I was the third person online.
So why'd you get here so early?
Because I want to see Rich. I want to touch him.
What do you guys think of Joji?
Oh my God!
That's my dad, son.
You guys cop the new EP or like?
Yeah. I woke up at 6 in the morning just to cop that shit. And then I listened to it, and that shit started making me cry.
This is actually kind of exciting. Every time, this never gets old. Like, you live online and social media, but like, there's nothing like just being with the people.
fuck you said I should quit.
More often than not, viral success happens by accident. And then after an appearance on Ellen or Jimmy Kimmel, the creator's star power fizzles out. But Idiot Rising has figured out how to turn potential gimmicks into brands with an actual following that keeps coming back for the next thing.
Oh shit!
So keep an eye out for Idiot's next move. But more than likely, it won't be covered on network television or terrestrial radio. Although, as they've already proven, nowadays that really doesn't matter.
Online retailer Farfetch is betting it can shape the future. This is its concept store, showcasing the latest in retail tech.
How do you capture all of that fantastic information that you gather in store with customers, touch and feel products? And we've created a concept called the connected rail. And this is using a combination of RFID and ultrasound. The RFID signal recognizes the product, and the ultrasound recognizes the movement. Take the product off, and then you'll start to see your products appear. And essentially, it's like online browsing behavior. Whichever products you touch and pick up in the store are automatically sent to your app. This is effectively what you've created is your in-store wish list. In the middle, you'll see essentially a hologram of the product. What the customer sees, they control the experience on a touch device. What this allows the customer to do is take elements of products and then add their own style to it. Right, so this is the connected mirror. So in this example, I see my products. I select a coat, and that's tried it, and it's slightly too big for me. So what I can do is choose an alternative size and send a request to the sales associate, and they'll bring that size to me in the fitting room mirror. You'll also see that we've got some product recommendations here. Crucially, the sales associate's able to push items into the mirror from their device. If you wanted to, you could simply use the mirror and pay and go. Your items would then be packed and dispatched to you afterwards.
Do you want me to turn you so you're looking outwards? Yes, please. How about there? First time we came out with B, Jade said, it feels like I've been released from prison. Do you want these, Mrs?
Definitely.
Definitely. Right.
Yeah.
And she could say hello to everybody, people she hadn't seen for months.
It's
Hi, it's
Jade.
Jade.
Oh. So you can talk to Jade through this.
Hi, Katie. She's there.
Hi.
Every time anyone's seen her, they want to know why she's there. And it's kind of the opposite of when you're in a wheelchair and people see you and they kind of go, oh, should I look? I don't know what the right protocol is. When there's a tiny robot with its bright little eyes going around just looking happy everywhere, it really opens you up for conversation.
You've got some friends here, look.
Hiya! When I saw her for the first time, I remember thinking, this is going to change things. This is one of those points where if this was a book, this would be the cliffhanger. condition called Ehlers-Danlos syndrome, which means that I have a lot of dislocations, there's a lot of pain, and a lot of seizures and whatnot. So I can end up on my own in my room for long periods of time. A lot of the time with a condition like my own, of course there's the pain, and the pain is bad, and the dislocations are bad, and the seizures and being in paralysis and never knowing whether you're going to be able to wake up properly tomorrow, that's bad. But what's worse still is being able to count the number of people you see a day on one hand.
Are you ready?
Sure am, I'm just hoping the connection's going to stay.
Yeah, me too. Alright, here we go.
When you're used to just the same little metre by metre and a half window every day, and you've been there for months, being able to just see the sky from somewhere else, or the tops of trees, or a sign, is incredible. Or being able to have that kind of chat in the car that most people would probably take for granted.
I'm going to go past Grandma and Grandad so you can give them a wave. Now, if Jade is particularly seizure-y, she can still take part. And that's brilliant, really, because before she would just be left in a bed or in the house with just her carers. It's quite a small world, that.
Right, so there's one of her. Here, this costume I'm busy making at the moment. When I'm not on bed rest and I'm not just wearing pyjamas all the time, I enjoy being able to dress as different characters and go to Comic Cons and that kind of thing, because it just lets me show a different side of myself, and it's a bit of fun. If you can't go out that often, you've got to enjoy it when you do.
Was that? Good.
It's one of those weird things where I want to not have to use B because I want to be well enough to be able to go to those places myself. Like, it really makes a big difference to me to be able to go into school. But the thing is, with my condition fluctuating all of the time, I can't go into school reliably.
He's written it out bigger on the board. Thank you.
Today's the first day that I've been in school via B, and so far it's interesting. Still a few little things that we need to work out, but for the most part I think it's going fairly well. And it's brilliant because I can really tell the difference between today and yesterday. How yesterday I forced myself to go into school when I wasn't very well, and I was really tired afterwards and ended up having loads of seizures, whereas today I've been able to do all of the work, I've been able to keep a clear head and not be ill, which means I'm able to be more focused on my schoolwork.
So there is my first step of working, is to simplify root 8. The algebra test is next week.
Now I'm trying to make friendships which I'll be able to maintain with B. Before that, I end up letting people down quite often. B gives me hope, yeah. She's just always there. And if I can't do something, she can. And if I need sort of assistance to be able to make commitments, then she's there, and she means that I feel like a more valuable person because I'm more reliable.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
The cubicle represents a tyranny. It confines your imagination, your thoughts, into a small physical area. Imagine pretty much every software engineer or finance person being able to, disconnect from their desk and look at holographic monitors on a beach and doing their work from there. That's not going to be science fiction. It's the modern office place.
Silicon Valley is all about building the future. A startup called Meta thinks it's getting there first, thanks to a big bet that it's made on augmented reality.
How are you?
Good, thank you. Welcome to Meta.
Thank you.
Call it a 360-degree office where you can spatialize your thoughts as part of your workflow for education, architecture, design, engineering, etc.
People often mix up augmented reality with virtual reality. VR totally blocks your ability to see or hear the real world. AR overlays holograms onto what you already see. Meta has tried to make its version of the workspace feel familiar.
You grab the hologram instead of using a controller or a mouse, and your brain already knows how to do it. In other words, we've designed an operating system that humanity has always known how to use. So you can see this eyeball, which is, by the way, photorealistic. You can see my hand is occluding the eyeball, and now the eyeball is occluding my hand, right? You see those two circles? They get small, and then they turn into this glowing white ball, and then I can move my hand around supernaturally. I can do this with two hands and rotate the thing. I can stretch it. I can throw it back right into the shelving system, and that's all you have to learn to become a modern worker.
And to prove this, the employees at Meta have started to get rid of their computer monitors, trading them in for Meta's augmented reality headsets. Myron thinks that in less than a decade, we'll all be just wearing strips of glass that can project holograms.
In the early 80s, everybody had computers on their desktop, but no one was using them because they had a lot of work to do. So they were still using typewriters. And at some point, the CEO took all the typewriters away and everybody was forced to use their computers. So it's very exciting to see a new generation of technology, a new paradigm.
I consider us like pioneers in the holographic wild. I'm pulling up my browser with my hands and sending out emails to colleagues and just kind of really acclimating to the new environment.
Now you're putting on my computer, essentially. Our digital lives live on our phones. We have all of our pictures and notes and all these kinds of things. So why don't you write yourself a little sticky note? I like it. And go ahead and just take your fist right over the top of the sticky note and close your fist. And now...
Oh, what? Meta's own transition to augmented reality has run into plenty of unexpected problems. And it's still going to be a while before you'll start to see these devices in your office. But I think it's a future worth waiting for.
If we could see these holograms between us, we will have been able to share our work with one another more naturally, more efficiently, and more productively than ever before. Humanity will have evolved slightly.
This is Hatsune Miku, Japan's sensational virtual pop star. She's released over 100,000 songs in multiple languages and performed sold-out concerts around the world. Her image has appeared in games, on TV, in car races, and is even etched on the side of a Japanese space rocket.
I came for Hatsune Miku, Carlos.
She's Lady Gaga's favorite digital pop star and opened shows for her in the US 3 years ago. Tens of thousands of fans attended her exhibition and live shows near Tokyo recently.
理想のアイドルっていうと、どの曲でもミクはすごい綺麗に歌ってくれる。
他没有缺点啊，没有任何让我们感到不开心的一些新闻。
She's everything to everybody. That's probably why she's so popular.
Miku's creator Hiroyuki Ito and his Sapporo-based company have been developing the virtual diva for over 10 years.
初音ミクとは、キャラクターとしてすごく、YouTube とかで検索すると、たくさんの初音ミクが出てくるんですけども、元々の、初音ミクのその原点は歌声を合成する、ソフトウェアなんです。
Both the software and character are named Hatsune Miku, meaning the first sound of the future. Originally based on Yamaha's Vocaloid technology, Miku the software has a sound bank containing voice samples and a huge array of tools. You input the melody and lyrics, then Miku the character sings them. To date, Krypton has sold 120,000 software licenses at $200 each to fans around the world who use it to create numerous songs and share them online. Some of the fan-created songs are chosen to be part of Miku's concerts, for which they're paid a royalty fee.
もともと初音ミクっていうその、存在自体がそのボトムアップって言いますか、中にはアマチュアクリエイターじゃなくて今もうすでに、プロになって活躍している方もいらっしゃるんですけども。
The company also has other revenue streams. It makes money from merchandising, licensing deals, and concert ticket sales. According to the real-life musicians who perform with Hatsune Miku, the virtual pop star is interesting and surprising.
今年で3年ぐらい、ちょうど3年ぐらいやってきて、ライブも数十本、数百本やったの。そういうことが演奏によって起こせるためのそういう器みたいな感じになってます。初音ミクらしさって僕はあんまりない。初音ミクって何だってありっていうか。
For Ito, Miku has the potential to change the way we think about music.
そういう新しいそのテクノロジーによって新しい音楽のあり方っていうものを模索していきたいと思っていました。
And for her fans, it goes even further.
初音ミクって魂がないので、だからみんな魂を作り上げるために存在しています。
Now, there are a lot of fitness gadgets out there. In my quest to get fit, I tested 17 of them over the last few months. At least one personal trainer I know was a little bit skeptical.
Yeah, I've been watching these new technologies come to the market for almost as long as I've been a personal trainer. They're just tricks and tropes. They're not much different than the Bowflex machines or, to be honest, the original Jane Fonda workout video.
But some of these gadgets that are just coming to the market do so much more than what they used to do, just tracking your activities. Out of all of them, this chest strap was my favorite. It comes with a robot coach that points to the future, one where you might not need a human trainer at all. And it works like this. You wear the chest strap so that it can read your heart rate, and that connects to Move's free app that talks to you.
Welcome to Move Heart Rate Hit Outdoor Running. Let's get moving and warm up in Zone 2.
Move's computerized coach tells you what to do at that exact moment, whether you're running outside or you're doing body weight exercises indoors.
Swing your arms faster to get your legs moving quicker. Let's crush this round.
And by reading your heart rate, she knows exactly how hard you're working. She keeps you honest.
Way to go, you are in the target zone. Keep pushing, you're almost at the end of the round. Don't give up.
I've been running for 7 years now, and my biggest problem is that I never push myself hard enough. I end up going on the same slow, comfortable 30-minute jog, but the Move HR Burn blasted me out of that rut. By the end of these half-hour exercises, I was drenched in sweat in a way that I never am when I work out alone. Training with a real person is great, whether that's your group instructor or your coach or your personal trainer, but humans, they're expensive. For the rest of us, this $60 gadget is all you need.
what does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
I'm about to expose everything you won't admit.
And action!
This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh.
But to fans all over the world, she's the YouTube star Superwoman.
What up, everyone? It's your girl, Superwoman. I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada, was like, Canada, is your daughter making videos? And my mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're gonna go to school and then graduate and then get married and then get a job and have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010 and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi, Lily, where's the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
And I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name.
Maybe there should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views and the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rusovsky is the CEO.
It's like a high-powered microscope, and so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rusovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in the laboratory takes time. There's regulatory approvals, there's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was in his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did, and should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company, and that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! That's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner, and they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over the head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag #GiveDivas_a_chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned even if there are swerves ahead.
Ara, thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world, and I just want to get back to doing business.
It's quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, etc. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well,
peanuts by the standards of
profits would help. So at some point we absolutely have to become profitable, and that's part of the plan.
But do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things spar against each other?
I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, etc., sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
Some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is the spirit of innovation, the spirit of can-do, etc., but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering
to,
in
mean to a layman like me? Crashing.
Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars you have to deal with existing roads, existing everything. Flying cars, essentially you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back, somewhat reluctantly, back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets, rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
you had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people.
That's telling me.
Just not interesting. I do think seriously, though, the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point we are leaning forward, and 2018 for us is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, you know, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers, the tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous, because they have followership within the company, because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem, because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership, so it is incredibly important for the top performers to actually be held to account more radically than anyone else, because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, you know, excellent cultural values, and one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms, because to me, it's not just these values that you put on the wall and kind of people stare at and you know, it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that, Do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company. And to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in this space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
So live from New York and New Jersey, streaming on YouTube. Yep, it is Friday, October 9th, 2020. TGIF, but also FYI, because this is a really big day for us. Jason, me, our whole BW team, because it's our last Friday, 4-hour show together right here on Bloomberg Business Week.
It is indeed. I am going off to a new project at Bloomberg to be the chief correspondent for Quick Take, our new network that is launching next month. I am so sad to leave the team, so sad to leave you, Carol Masser, so I'm going to enjoy every minute of today.
Well, me too. Like I said, I've been counting all the last seconds that we have together. All right, we're going to talk about this and a lot more over the next 4 hours, but we got to get you going on this Friday with a check on that trading day. Hey, Charlie Pallet.
Well, hello. There are a lot going on in the markets right now. First of all, let me give you the numbers, give you the why in just a moment here. S&P up 31, a gain there of 0.9%. The Dow's up 170, up 0.6. NASDAQ up 144. That is a gain of 1.3%. 10-year now up 1/32, 10-year yield 0.78%. Gold up 1.7%, $19.25 the ounce. And crude is down 1.3%, $40.67 the ounce. President Trump says he would like to see a bigger coronavirus relief package and wants more aid than Congress is offering. His remarks came during Rush Limbaugh's radio show. Stay with Bloomberg for the very latest. Again, recapping here, equities higher, S&P up 31, on track for an up week, up today by 0.9%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. So lots to get to today. It's been, as you heard from Charlie, kind of an interesting day in the markets. We've got the president right now who is, I guess, guest hosting Rush Limbaugh's radio show. So we're constantly monitoring headlines coming out of that. I mean, it's really something. I mean, we've come to expect the unexpected. That is for sure, something we've learned together, Carol Masser, over the years.
Totally.
But Listen, this is a market and a world that's going to keep us on our toes. Let's do the best we can in setting the Business Week agenda. For that, we turn to Vincent Signorella, global macro strategist for Bloomberg. He joins us on the phone from White Plains. And Dave Wilson, he's our stocks editor, of course, author of the Chart and Stock of the Day. He joins us from New Jersey. So, Vince, if you're a trader looking at this market, kind of looking at this world right now, what are you talking about?
Well, first thing I want to talk about is thank you very much. You've been one of the most gracious people I have met at Bloomberg. And we're going to miss you, but I'm sure you're going on to bigger and better things. And everyone should know how this man has held hands and mentored young people in this company, and he's an absolute star.
Well, thank you, Vince. That's very, very nice of you to say. I
You're
really
very
appreciate
kind.
it.
No, seriously. And now for the markets. Fade, fade, fade. There is no deal coming. McConnell is not going to be able to get a deal of this magnitude through the Senate. I don't know why when people report this, they don't keep going back to what he said. This morning, he basically said, why am I going to fracture a party 4 weeks before an election when he knows he can't get this through the Senate? So they could agree on $5 trillion for all that matters. I'll be okay. There's so many people involved in this.
I know. I'm upset, too, about Jason leaving me. I know. It's affecting all of us.
I can't even talk.
I got it. I hear you. Please, I get it.
I mean, McConnell and there are senators who don't even think that any more aid is necessary, let alone 1.8, 2.2, whatever number you want to put
A lot of senators, I think, Vince, right?
Yeah,
Not just a couple. But a bunch.
The crazy part is we know that there's been division in D.C. politics, but it's usually between the Democrats and the Republicans. But to see kind of the division, Vince, within the Republican Party about this just a few weeks from an election is kind of mind-blowing.
Well, if I can, it's not an easy thing to explain, but having lived 6 years in the Midwest, I can tell you that these are really, it's a fiscally responsible feeling. It's not the way we do things in New York and California. They have a very hard time understanding that. And the same with Illinois, but they put up with Illinois because it's close. It's in the middle of the country. But there really is no appetite whatsoever to give a great deal of aid to states like New York, California, Florida, that the feeling in the more frugal, fiscally responsible states is, we do it the right way, you give it away, and now you expect us to pay for it.
But let's not forget that New York and California economy are very important to the overall U.S. economy.
Totally, but I will bring you back to when Hurricane Sandy hit New York. How long did it take aid to get to New York? Even, the politicians did not want to give money to New York City. They just didn't want to do it. There was a big fight over that. So you have to take that into account when you see this going, and it's built into the mindset of politics. And McConnell knows this, and he's looking at it and saying, I can't win this. I can't get it through.
Yeah.
So it's most likely going to have to wait
until
after the election, which means you're really talking about after Inauguration Day.
That is amazing. So wait.
So
I want to bring in Dave because, Dave, let's look at the markets because we have seen investors, and Vince has talked about this as you have, push the markets, the equity markets higher on expectations of more aid. So if the scenario that Vince just outlined, we've got some enthusiasm a little bit in the markets today, what happens?
It's a good question, especially when you look at a day like today and you see the two consumer-related groups in the S&P 500 are among the day's best performers. I mean, consumer discretionary, which of course includes retailers and therefore Amazon.com, is leading the way here. And then the makers of consumer staples, food, beverage, tobacco, not too far behind. I mean, it's going to be interesting to see how all of this shakes out. And I will say, Jason, you will be missed, and we'll talk more about in the next segment when I get to my chart and stock of the day.
All right. That's a good tease. That is a very good tease. Vince, final word from you. You go into the weekend. You don't think there's stimulus. You're pouring yourself a vodka. What are you thinking about when it comes to the market? I mean, we're 25 days from a presidential election. And not just a presidential election, a massive national, state, and local election.
Yes. I think the market likes this idea. They're looking long term. They're thinking 2021 is going to be a spectacular year. It has every indication that it will be, but it's likely to be more skewed towards the second half than the first half. You look for opportunities to fade it, but you don't want to get run over in the meantime, which is probably what happened to a few people today, to be honest.
Totally. All right, Vincent Signorelli, you're the best. Thank you so much. Global macro strategist for Bloomberg. Joining us on the phone from White Plains, just down the road from me. Dave Wilson, we'll be back with him at 3:30 for his chart of the day and his stock of the day after the close. Carol?
Yeah, yes, indeed. So looking forward to that. I'm also looking forward to the next 4 hours, Jason, not just because they're my last 4 with you in this format, but also because we've got some of our favorite voices. Craig Gordon's going to be with us, our DC Bureau Chief. Politics and the virus, as we just talked about, front and center, and our go-to person, certainly in-house, is Craig Gordon, one of them. So looking forward to kind of wrapping up what was a cray-cray week in Washington. We've also got The Economist that's become a pandemic sensation. We talked about her yesterday.
We talked about her yesterday. We're going to talk to her today. Listen, if you are a parent, she's a must-read. Absolutely. Yeah. Her columns, her books, all of it. Just
Reese
really
Witherspoon is following her on Twitter. I'm just going to say that.
There you go. We're also going to head down to my hometown, the ATL, check in with Frank Patterson. He's got a massive new project underway.
It's huge.
Really Hollywood South, man.
Yeah.
And then Sip or Sweat.
Sip or Sweat. We couldn't finish out today without doing another version. And this time it's going to be Sweat. We're going to talk about boutique fitness, man. They are really kind of fighting for their lives at this point. So we're going to talk with 2 major players. You know these 2 people.
I do indeed. Yeah, John Canerick, he is one of the most influential investors across the fitness landscape. So is excited to catch up with him. And CEO of SLT, it's one of the hottest boutique fitness concept in New York City, but they're struggling. So this pandemic, it has laid it bare.
All right, let's do the Bloomberg Business Week Bite of the Day, one number that tells us a lot. Today's number is $2 trillion. U.S. corporations are putting $2 trillion in the bank in the run-up to the U.S. election. U.S. companies skittish about the pandemic and an uncertain outcome of that election have reconsidered spending plans on everything from shareholders to factories. As a result, Jason, it's adding up. $2 trillion in the bank.
Yeah.
Just in case.
Yeah.
That's a big just-in-case fund.
It is, but folks are worried, that's for sure. All right, let's get down to Washington now. Nancy Lyons is there with some headlines. Hey, Nancy.
Hey, Jason. Well, the president is signaling he is willing to pass a stimulus bill. Joe Lavorgna is chief economist for the National Economic Council and spoke with Bloomberg.
What I can tell you is that I know we're negotiating in good faith, and Secretary Mnuchin is working hard, and the president wants a deal.
The size of a package is still a question. President Trump said this afternoon on the Rush Limbaugh show that he'd like to see more aid than either the Democrats or the Republicans are offering. Well, the White House says a new story in the New York Times is a hit piece. The paper is reporting candidate Trump received $21 million in highly unusual payments from a Nevada hotel back in 2016. As Trump's presidential campaign was struggling for cash. The information was in tax records recently obtained by the paper. The payments could violate tax or campaign finance laws. Well, Joe Biden's campaign is holding off of releasing its funding totals for September, apparently out of concern that it might prevent people from giving in the last weeks of this race. House Democrats are introducing legislation to form a commission to review a president's health and fitness for office. House Speaker Nancy Pelosi says the actions of President Trump made the bill necessary, even though it will apply just to future presidents.
We are reminded of the necessity of action by the health of the current president. With this bill, the Congress honors our oath to support and defend the Constitution and protect the American people.
The 25th Amendment is a vehicle for temporarily removing a president if he or she is deemed to be unable to perform the duties of the office. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week. Coming up, we're going to check in with one of our go-tos, really our go-to doc on all of the virus-related headlines. We're talking about Ian Lesbader.
Yeah.
And ahead of that, we should talk about one of the most read stories, Carol, because it's about this rapid COVID test. This has been, I feel like, the most important story of the last couple weeks. The rapid testing, we have seen it succeed. We have certainly seen it fail. And this story by John Tazzi, Angelica Levito, and Emma Court talking about a risk of false positives.
Yeah, listen, remember, was it a few weeks ago, a month ago, where the White House came out, big press conference, and they unveiled these rapid tests? We did a cover story about the importance of them and really kind of helping the world get back to normal. So this push to get them out and arm nursing homes with rapid coronas tests, apparently stumbling on concern that the tests return false positives. This is important. So putting at least one state at odds with federal officials over the value of the test. Nevada, this month, ordering nursing homes to stop using the point-of-care tests after they found more than 20 instances where positive findings were overturned by more precise testing. And so, you know, this is important, and this is, if you're going to put these rapid tests out there, they've got to work.
They got to work. and by the way, like false negatives or false positives, it's all bad. You know, like it's got to be right.
Correct. That's especially right. If you get a test result, that's going to determine what kind of behavior you are, and that's going to essentially determine whether or not you could possibly infect somebody else or not. So this is that whole.
And if you get a false positive, like especially if you're an hourly worker or you need to travel or something like that, you need to take care of someone. If you get a false positive, and then you end up quarantining or isolating, I should say more precisely, for 2 weeks, like what?
This speaks to the remarks in the magazine that are also the cover story about the White House policy that's often been, you know, in conflict with what states are doing and not really a cohesive policy, and that creates a lot of confusion certainly across the country, which many say is a reason why our numbers have been higher than other developed nations and other places. You are listening to Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelleton. Up Friday, stocks are gaining as stimulus speculation takes center stage. The Dow, the S&P, and NASDAQ all higher. S&P up now by 27, a gain of 0.8%. S&P up for a third day with the White House planning to offer a $1.8 trillion stimulus proposal. The Dow's up 139, now up by 0.5%. NASDAQ up 138. For NASDAQ, that is a gain of just about 1.2%. Should point out that stocks are on track for the second weekly gain, with the S&P now up by 3.8% this week. 10-year up 3/30 seconds, 10-year yield 0.77%. Gold up 1.8%, 19.27 the ounce. West Texas Intermediate crude down 1.3%, 40.66 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Well, another week of so many headlines related to the virus. It is such a pleasure, as always, to catch up with Dr. Ian Lustbader, our soothsayer, our truth teller, our guy who really helps us understand where we're going and where we are. Clinical Associate Professor of Medicine at NYU's Langone Medical Center. He joins us on the phone from New York City. Ian, how are you?
Hi, happy Friday. Hag Sameach. Hope everyone is doing well. We are so far thriving, but seeing lots of patients and seeing some long haulers and some COVID patients as well. So we are not out of the woods just yet.
So let's talk about that. I mean, what is the reality check for this area that we all live in, specifically the New York City area I'm talking about? Like, where are we right now? We see hotspots reported, but you are quite literally, Ian, on the front lines. Tell me more about what you're seeing.
So, we're definitely seeing an increase in cases, and I think whenever you see hotspots, the danger is that extending into other areas of the community. We're certainly seeing in the Midwest as well, not just in New York City, some hotspots, but throughout the country. So I think until we are all able to get a preventative medicine, or until monoclonal antibody infusions are widely available, we really have to resort to the old traditional infectious disease controls of, mask wearing, even though we know that's not 100% effective, and social distancing. And last week we talked about some in the more religious community, and it is important that everyone follow the guidelines. Mm-hmm. There is no problem. There's no conflict between religion and spirituality and good health and science. All religions really emphasize healthy behavior, and this is just part of that for the time being. So there should be no conflict with being observant in the way you feel is appropriate, and also doing good behavior for the community.
Right. I mean, I feel like that's been one common theme in that we've talked about. It's the whole virus is all about a sense of community. It's protecting others. I mean, you want to protect yourself, of course, but you really have to think about, that's what mask wearing is ultimately about. When you look at, though, what's going on around the country, I think I was kind of thrown when I was watching some programs, some news programs, and they were showing a map of the country and showing where we're seeing increases in cases, and it was almost blanketed across the country. So is this kind of the second wave that we've all been talking about? Is this the beginning of it?
Yes, I think that is the case. We certainly saw a drop in the number of cases, and really around the world we're seeing, these second waves. And unfortunately, if you look at even back to 1918, the Spanish flu, these viral infections do come in waves. They do mutate a bit. People do develop some slowly but surely herd immunity. And again, the idea is to kind of flatten the curve. No one ever said we're going to completely stop cases, but if you're able to decrease hospital surging by wearing masks and using prudent behavior, that will kind of protect the healthcare system so that people who need ventilators or people who are sicker can be admitted, and there's more reserve in the system. So I think we are seeing the second wave. We're seeing it really around the world. This has happened in prior pandemics, and I think we have to continue certainly to be prudent.
So, Ian, I have a feeling that you've been getting a lot of phone calls and texts and emails from friends, family, patients about everything we've seen over the last week or so, especially with the treatment of the president around various drugs. We count on you to separate the signal from the noise. What do we need to know about what we've learned, especially in terms of therapeutics over the last few days?
So not everyone gets the same treatment as the president, but I think he had a very aggressive regimen, and I think actually a very smart regimen. It's certainly something that it would be great to offer many patients, and really all of these medications work in different ways, just like we do HIV cocktails or hepatitis C cocktails, where we have several medications that work slightly differently for the viruses. In combination, they can be highly effective, and I think, the president is a good example. He was in a high-risk group, being male, older, overweight, and there are other risk factors that other people have: high blood pressure, diabetes, lung disease, kidney disease, that we all know about. And I think that's also why our death rate, our case fatality rate, is a little higher here. We say, why isn't America not doing so well? Part of it is our fault. Our population tends to be overweight, more sedentary, couch potatoes. I don't want to generalize, but we definitely have.
You're not wrong. I think that's a fair assessment.
Well, we talk about data. I think the data would bear you right.
Yeah.
Bear out. Yeah.
Exactly. We have almost a 30% obesity rate, and quite frankly, that's a high risk with COVID patients, and I think that is why we have a higher case fatality rate. I don't think it has anything to do with management, which is kind of standardized. But in any case, he got this cocktail of monoclonal antibodies by Regeneron, and Lilly is working on this. Regeneron, by the way, is headed by a colleague, classmate, George Yancopoulos from Columbia Medical School, and Regeneron is smart. These are antibodies, monoclonal antibodies developed in mice.
Ian, hold that thought, because we want to go along this line, because I know the president talked a lot about it, and we've also had listeners saying, well, wait a minute, can everybody easily get this? Can it ramp up quickly? So we want to continue. We're going to do a little bit of news, and then we're going to bring you right back. We are talking with Dr. Ian Lustbader, really such a smart voice when it comes to everything on the virus, and he's really been a go-to for us. He's Clinical Associate Professor of Medicine at NYU Langone Medical Center. He's going to be back in just a moment. In the meantime, you are listening to Bloomberg Business Week. Carol Massar, Jason Kelly, and this is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Coming up, we're going to continue our conversation with our pal, Dr. Ian Lustbader, talk a little bit more about some of these treatments that are coming out, because I know I've got questions, and I'm guessing he's fielding a lot of them, right?
Right, and I feel like there's going to be a lot coming up as, consumers' patience, essentially, and we need to understand kind of what's coming our way. All right, we'll get back to him in just a moment. Let's get back to your top business stories. Another check on that trading day. Here is Charlie Powell.
Thank you very much. We begin with this headline from the Bloomberg Professional Service. Aeromexico's $1 billion bankruptcy loan has been approved by a New York court. Also, J.P. Morgan Chase CEO Jamie Dimon sees personal travel resuming before business travel. The Dow, the S&P, and NASDAQ, they're all advancing on this Friday, on track for another winning week for the U.S. stock market. Stocks rallied on pace for the best weekly increase since August, as traders bet that lawmakers are moving closer to providing more fiscal stimulus. Here's where we stand. The S&P is up 27, a gain of 0.8%. The Dow is up 141, up 0.5. NASDAQ up 137. For NASDAQ, that is a gain of 1.2%. Treasury yields mostly flat, a dollar gauge slipping. Right now we've got the 10-year up 3/32, 10-year yield 0.77%. Gold up 1.9%, $19.29 an ounce, and they've mediated an end to a potential oil workers strike in Norway. Crude, West Texas Intermediate, down 1.4%, $40.60 a barrel. President Trump scheduled to be getting a TV doctor's assessment tonight. It was a week ago, of course, that the president first unveiled his positive test for the coronavirus. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health. He was interviewed this morning on Bloomberg Television.
He's approaching that phase where he should be able to resume all of his duties per what his doctors have said. I think a bigger issue, though, that you see from the debate, that you see from the Supreme Court nominee announcement, is there has to be a better sense of responsibility, to be honest, in terms of making sure the public health and the social interaction interventions are in place to limit the spread of the virus in the White House and in this staff.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. President Trump credits an antibody treatment from Regeneron Pharmaceuticals for a quick recovery. Regeneron shares, they're up now by 0.2%. Recapping equities higher, S&P up 27, a gain of 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, let's get back to our conversation with Dr. Ian Lustbader over at NYU's Langone Medical Center. So, Ian, you were starting to talk about, and we stopped you only because we want the full answer as to how we need to be thinking about these treatments as everyday people. And I'm glad you made the distinction that, we can't all just copter over to Walter Reed and be like, give me everything, give me what you got. But how do we think about it?
So, for one, it does show you that in the White House, even though people are tested every day, because there's an incubation period, you can be infected and not recover virus from the nasopharynx or from saliva, that this is not a 100% foolproof approach. Testing people every day, whether it's back to school, and we do need to accept that it is imperfect, no matter how careful you can be. And obviously, at the White House, they're very meticulous, and in a close proximity, people working together. Really, all you need is one person where that test doesn't catch it until they are more viremic, where there's more virus there. So, he became symptomatic and really got a cocktail, an unproven, but I think a very intelligent, smart cocktail, with not all of those drugs yet FDA approved. One was remdesivir, which is approved as an antiviral, and we do give those to patients in the hospital. Dexamethasone, which typically is given, you don't want to give that too early because it is a mild as a steroid and immunosuppressant, but we do give it to people who are getting more inflammation. So I suspect they were a little concerned about him with blood oxygen, or perhaps his x-ray was abnormal. I don't know that. But that definitely decreases inflammation. And probably one of the key drugs, which is yet to be approved, monoclonal antibodies, and Regeneron is one of a couple of companies working on this, and at least with the Regeneron system, headed by one of our Columbia PNS alumni, just to put in a plug, these are mice that have a humanized immune system, and monoclonal antibodies are developed to the spike protein, which is the common protein. So even though the virus may mutate, that spike that's typical on the outer shell of the virus has monoclonal antibodies, and that can dramatically reduce the amount of virus in the bloodstream and really help the body's own, buy time for the virus to be cleared and your own immune system clear it. So that, I think, has great potential. The problem, of course, is it's given intravenously, so you can't just pop a pill.
Yeah, you can't just pop a pill.
Right.
Right. And it is yet to be approved, but I think it certainly will be a big addition to the armamentarium. And like many other viruses and drugs, having that combination therapy, an antiviral to reduce viral replication, antibodies immediately, so you don't have to wait for your body to develop antibodies. You're given these passive antibodies, which soak up the virus, and then perhaps dexamethasone in some patients. So, this makes sense. I think we're making progress on treatments, and we need to do that until a vaccine arrives, which, again, will probably be very helpful. It may not work in everyone, but, again, as long as we have a 60% effectiveness and as long as we're able to get to more of a herd immunity, that should make a big difference, but that's not until spring.
Right, exactly. And as our reporter, Bob Lingreth, who's got the cover story of the magazine, and he's done a lot of reporting on Gilead and Remdesivir, he said, Regeneron only has about 50,000 doses available, and he says we've got 50,000 cases of the virus popping up every day, so the numbers are not in our favor for even some of the treatments like that. So it's tricky, Ian. Just got about 30 seconds left.
Yep, we're making progress. I think they're going to ramp up. That's why we have to do what we can do while further therapeutics and vaccines are being developed, which is acting smart, and we know what to do. And,
wear a mask, social distancing.
Absolutely, you got it.
All right, kiddo, be good. Have a good weekend, and we love talking to you. I don't know if you know, but this is Jason's last time with me on this show. Yeah, he's not leaving Bloomberg, but I know we both
great working with you guys.
Yeah, love you, Ian. You're the best, and we really the stuff that you have brought our listeners has been invaluable over the summer. So I'm excited to be a listener and keep listening to all your wisdom, because you really have kept us honest and our listeners honest throughout the course of this. We have leaned on you heavily and know that you have many important things to do. So we're grateful to you for making time for us, because it's really important that we get the right information out there and from people who are really doing it, and we're grateful to you.
He's often been at the hospital, like in the thick of it.
Totally.
And found some time for us, so we really appreciate it. All right, let's get back to world and national news headlines. Over to Nancy Lyons we go in our D.C. studio. Hi, Nancy.
Hey, Carol. President Trump says he wants an even bigger stimulus than what Democrats have offered so far, seeming to undercut his own negotiator, Treasury Secretary Steven Mnuchin, who had prepared a $1.8 trillion offer to make to House Speaker Nancy Pelosi. White House economic advisor Larry Kudlow says the talks are continuing.
Secretary Mnuchin, Speaker Pelosi will be on the horn this afternoon.
Pelosi and House Democrats have proposed a $2.2 trillion plan, which is down from the $3.4 trillion package passed by the House back in May. The negotiations have been deadlocked for weeks as the economy struggles to recover from the ongoing coronavirus outbreak. The Trump administration is sounding optimistic about reaching an understanding with Russia on nuclear weapons. Bloomberg's Nathan Hager reports from Washington.
A source tells Bloomberg News Presidents Trump and Putin tentatively agreed to a nuclear weapons freeze during a recent phone call. The details haven't been ironed out yet, but the idea would be for both the U.S. and Russia to declare the number of warheads they currently have and commit not to go beyond that. The freeze would be accompanied by an extension of the New START treaty, which is due to expire in February. Till now, the U.S. had demanded China take part in negotiations. That country is rapidly expanding its nuclear arsenal. Both Russia and China opposed three-way talks. In Washington, I'm Nathan Hager, Bloomberg Radio.
Hurricane Delta is heading toward the Gulf Coast as a Category 2 storm with winds of 110 miles per hour. Landfall is expected tonight in the part of Louisiana where Hurricane Laura caused more than 30 deaths in August. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. So I sent this story to you guys earlier today because it's one of my favorite stories, and I was fortunate enough to be in the interview that produced this. It's all about Smuckers, but it's really about Folgers coffee, and go figure, the kids love, I was going to say kids love Smuckers. The kids love Folgers.
The kids love Folgers. Yeah, it's a coffee
Not little
brand.
kids, the millennials.
Millennials. That's the headline on our story. Millennials embracing baby boom icon Folgers in the at-home coffee era. I said when I was in college, I had Folgers in the cupboard, when you quick needed a cup of coffee. So it's really wild. You guys caught up with the CEO of J.M. Smucker. He's Mark Smucker. He's the fifth generation of company leaders from that company, who obviously founded
family.
it. Yeah, it's so
I mean,
cool.
it's
I love
amazing.
that. I love that. And it's curious, what else did you hear from him about what people are putting in their pantries?
Well, I mean, it's interesting. We talked a lot about Uncrustables, which you're probably familiar with. A lot of peanut butter and jelly going on right now. And the at-home coffee thing, because they also have branding deals and distribution deals with Cafe Bustelo and Dunkin'. And so, listen, people are not going out as much. They're not going to their office, so they're not stopping by a Dunkin' or a Starbucks or whatever as much. And so they're making much more in home. There was a lot of pantry stocking at the beginning. We've heard that from other CEOs we've talked to, so that's moderated a little bit. They have been running their plants full. They're going to build a little inventory in anticipation of the second wave, but it's really good. And what's interesting, daily production of Uncrustables is now reaching as much as 3.5 million. Daily production.
I just love the word Uncrustables. And they've also been, building up their pet business like we've seen from Mars and some others.
And
because,
Unilever, yeah.
Yeah, I mean, those dogs and cats and critters are eating well.
Although he did say dogs, they usually eat at home, so that's not as much of a thing. They weren't dining out as much.
All right, you're listening to Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business
From
Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. U.S. stocks higher on pace for the best weekly increase since August as traders bet that lawmakers are moving closer to providing more fiscal stimulus. S&P up now by 27. That's a gain of 0.8%. The Dow up 146, up 0.5. NASDAQ is up 135, a gain of 1.2%. 10 years up 3/32, 10-year yield 0.77%. Gold up $35 the ounce. That's a gain of 1.9%. Precious metal now at $19.29, and West Texas Intermediate crude slumping 1.5%, down 63 cents a barrel at $40.55. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Jason,
can I just say, it's a story, it's a map, it's a podcast. That's how important this story is.
Yeah, it is such incredible work that this guy has been doing throughout the course of the pandemic, although even before, I feel like he shifted effortlessly from telling us everything we needed to know about the trade war to everything we needed to know about the economic impact of the pandemic, especially when it comes to the embodiment of the K-shaped recovery in a lot of ways, Carol. You know, like he is helping us understand this, I think, through the stories of real people, and this story is no exception. Talk about Sean Donnan. He is Senior Trade and Globalization Reporter for Bloomberg. He joins us on the phone from Maryland, but a lot of this is based on some incredible reporting, Sean, you did in Cleveland. Tell us about what you found, because this is part of a series of stories that really capture what's going on in America.
Thanks, Jason. Well, you guys are much too kind. I should just let you guys talk about this story.
No.
We're just going to talk about how great you are. You have to tell us about the actual
Stop.
story.
No, go on.
Look, I think one of the things we've been struggling to get our heads around as people in America right now is this idea of different letter-shaped recoveries. What does a V-shaped recovery mean? What does a K-shaped recovery mean? Are we going to see a W, a Nike swoosh? What are we going to see? And what's clear is that we're seeing a recovery that is being felt differently depending on where you are on the income ladder, where you are in terms of home ownership, where you are in terms of your ability to work from home. Whether you're part of what I've started calling bread baking America, you know, that's those of us who are out there learning how to bake sourdough and have really bought a lot of flour in the last 6 months, or breadline America, which is a much sadder place, which is those people who are out there who are struggling with housing security and food insecurity as a result of having lost their jobs as a result of the pandemic and the economic collapse we've seen since then. One of the things I set out to look at was the question of housing, and I really was my head was spinning on this one, and finally I settled on the idea of telling it through the story of two different houses, and that really gets at the divide in the recovery right now. If you are a homeowner in a suburb of Cleveland called Lakewood, you are seeing demand for properties soar right now. You are seeing property prices soar right now. And we talked to a newlywed couple who bought a house on Daleview Drive there, and they ended up being one of half a dozen people who bid for this house within hours of it going online. And they have a very happy story to tell. They're two tech workers, and they are doing well in life right now. They are working from home, and they've got this brand new home that they're moving into. On the other side of town, we went to the Mount Pleasant neighborhood, and I've been spending some time listening to proceedings in the Cleveland Housing Court. And in doing that, I ran across an eviction case involving a woman called Calais Gavings. Calais Gavings is a nursing assistant. She has rented a house in the Mount Pleasant neighborhood for $900 a month. And at one point earlier this year, she was laid off. She fell behind on the rent. When she was back at work, she just wasn't making as much as she used to, and so she ended up in the Cleveland Housing Court, caught up in an eviction crisis. And so these are today these two very different stories that you see at play in the housing market. But then you start scratching the surface of these things, and you discover that actually you can find really the legacy of the last crisis way back in 2008 and the subprime and foreclosure crisis in the property records that involve Calais Gathing's house and also just in the diverging paths that you've had between homes in predominantly black neighborhoods in Cleveland and their values and those that you've seen in predominantly white neighborhoods. So it's a recovery that's unequal, but it's also building on the legacy of the last crisis.
That's what's so troubling, Sean. And that's what, like you say, whether it was the east side of town or the west side of town, west side being wealthier, east side not so much, where it's mostly black neighborhoods and a high percentage of rental properties, it was already a struggling area, right? And then you layer on the pandemic and it's just gotten, worse again. But it's also, as you said, it was already an area that wasn't able to completely catch its breath from the last crisis. And, when we talk about wealth creation, I think this is a part of it. Like, these groups of people are never given a chance to create any kind of real wealth in their lives.
It is such a huge part of it, and it has to do with neighborhood stability in a lot of ways. I mean, the house that Calais Gathings, and she moved out at the end of September out of this house, but it's owned by an anonymous LLC, a limited liability company that is actually, if you kind of track it down, is a shell company owned by French investors who have flocked into Cleveland to buy up these cheap properties because they're searching for yield. The investor who owns that property bought it for $65,000 a year ago. They're collecting $900 a month in rent on it. That's a gross annual return of like 16%. It almost doesn't matter if the value of the house goes up, right? This is a cash flow play for those investors. And on the flip side, you have these predominantly white suburbs where you have had pretty steady capital appreciation. This house that we looked at in the neighborhood of Lakewood had actually more than doubled in value in the last 8 or 9 years.
Yeah. And Sean, I feel like, one of the most powerful pieces of your reporting is that you're telling stories that I am sure people in a number of different cities, countless cities across America, and you've been to some of them, you certainly talked to people in a lot of them, this could be their city too. This is not a Cleveland problem.
Oh, look, absolutely. It's a problem right here in Washington, D.C. I'm out in the predominantly white suburbs of Washington, D.C. I have a very different economic reality from people who are in predominantly black neighborhoods on the other side of the Anacostia River. It's the same thing in New York. It's the same thing in, out west. There is almost no American city where this kind of unequal recovery isn't the story.
Yeah, well...
Can I know we're running out of time, and we could talk a lot more about this, and I highly recommend. I'll put it out on Twitter. I may have already, but I'll do it again because I think it's a must-read. But is there any hope that things change, Sean, in your reporting? We just have about 30, 40 seconds here.
Yeah, no, I think one of the really interesting things is what do you do about something like this? And part of the problem here is that the policy response that's aimed at the broader economy is actually helping accelerate this, right? I mean, we know that the Fed pouring money into markets, lowering interest rates, that lowers mortgage rates. That helps homeowners and so on. There needs to be some kind of targeting for someone like Calais Gathings that say that $900 a month needs to go into building equity in a home rather than simply going to rent that is helping an offshore investor who has no interest in that neighborhood beyond cash flow and return.
Yeah, it's really, the wealth gap is so apparent, and that's a big part of it. All right, Sean Donnan, thank you. Really, really appreciate it. Your reporting, it is must-read as always. So check out this story. It's in the new double issue of Bloomberg Businessweek magazine, available on newsstands and at Bloomberg.com. It's also featured in the Stephanomics podcast with our colleague Stephanie Flanders. So get that wherever you get your podcast.
All right, for those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Businessweek continues. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next. This is Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Friday, October 9th. A rally underway. Stocks on track for a winning week. The Dow, the S&P, and NASDAQ are all advancing on pace for the best weekly increase since July. Traders betting today that lawmakers are moving closer to providing more fiscal stimulus. Treasury yields mostly flat. A dollar gauge slipped. S&P up for a third day, with the White House planning to offer a $1.8 trillion stimulus proposal. Senate Majority Leader Mitch McConnell, though, warning earlier that it is unlikely an agreement will be reached before the election. Well, as for the election outcome and the markets, John Normand is head of cross-asset strategy at J.P. Morgan Chase Bank, and he was interviewed this morning on Bloomberg Television.
To me, where you have the vulnerability in terms of a narrative shift is the possibility that maybe the Senate doesn't flip. And so if Biden is the president, but there's no change in control in Congress, then we're going to still be dealing with the same impasse around fiscal policy that we have now. And all this optimism around the sweep and stimulus and a reboot of the cycle is going to collapse.
And here's where we stand. S&P up 26, higher by 0.8%. The Dow's up 138 points, up 0.5. NASDAQ up 130, up by 1.1%. We've got the 10-year up 3/30 seconds. 10-year yield now 0.77%. Gold is up 1.8%, $19.28 the ounce. And West Texas Intermediate crude down 1.8%, $40.44 a barrel. Goldman Sachs says GE represents the best post-vaccine bet among industrials. Analyst Joe Ritchie saying, quote, "We think GE is the best self-help vaccine story across industrials and see 50% upside to our $10 12-month price target." GE shares now up 2.4%, GE at $6.81. The customer review website Yelp says it will start flagging businesses accused of overtly racist actions, taking a step to address a national movement to recognize racial injustice and across the United States. Yelp shares, they are down today by 1.5%. Again, recapping, stocks higher, S&P up 0.7%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, so we talked about her yesterday. She is the subject of a story in the magazine which reveals how she is the economist that's become a pandemic sensation by helping stressed out parents. And we've talked with her before. In today's Business Week Economics, we're so delighted, excited to have back with us Emily Oster, author and professor of economics at the Watson Institute for International and Public Affairs at Brown University. She's a Bloomberg opinion columnist, and she joins us on the phone from Providence, Rhode Island. Emily, we really are delighted. We had a great conversation with Esme Deprez, who wrote this great story about you that really gets into your background and also the impact you're having on our world today, especially parents, which we'll talk about in a moment. But talk to us about kind of how you grew up and how you got to where you are today, because I feel like economics is in your bones, your blood, your genetic makeup.
No, it's totally right. So thank you guys for having me, and I'm like incredibly grateful to Esme for having written this article. It's sort of always a little bit nerve-wracking to read about yourself, but I think I was so happy with it. So yeah, I grew up. Both of my parents are economists. That's probably the most salient piece of information. So I have two economist parents. I'm actually married to an economist. So I'm sort of like steeped from birth, more or less, in the idea of using economics for decision making in your household.
And so how does that help you maybe think of it differently? You know, in the sense that if you're kind of living and breathing it all the time, if it really is sort of baked into your very being, do you think that maybe you naturally think a different way than other people do?
I'm not totally sure, but I do think that there's a sense in which you sort of grow up with a way of approaching problems.
Yeah.
And, and with, like, sometimes I tell a story, like my mom didn't want to grocery shop when I was a kid. I said, why don't we go grocery shopping like everyone else? Why are you ordering groceries? And she said, well, I have a very high opportunity cost of my time. And, and I feel like for me, I was like, okay, that makes sense. And I think for a lot of people that would be like, what are you talking about?
Yeah, how do you pick up a pack of gum if you're not at the grocery store having those opportunities? I mean,
I think as a kid, it's how was I going to get to negotiate over the sugary peanut butter if we were just ordering online? It's painful.
But at the same time, like that notion of learning opportunity cost, though, and thinking about it is a really kind of intriguing one, because if you it's funny you say that, because I've actually I guess sort of showing my predilections as well. I've actually had that conversation I've talked about opportunity cost with my teenagers, and I do think that once you start to look at the world through a lens like that, it's hard to then not look at it that way, right?
Yeah, I think it's very hard to turn it off. And I think sometimes, it's good that I'm married to another economist, because I'm not sure that I could turn it off. And I think that for some people, this approach feels like really sort of foreign and odd. And it's like, what kind of argument is that for, I don't feel like I should have to load the dishwasher because it's not my comparative advantage. That isn't an argument that like works as well if your spouse is not also an economist.
Oh my God! I studied economics, and I don't know if I tried that at home. I think my whole family would just be like, "Yeah, we're done. We're done."
I've heard enough stories about your family, Carol, that that would not have worked.
It's not going to work. No, but it is interesting, especially fast forward a little bit. Like, we are in such a data-centric world, right? And I think about there is so much data out there for us to assess situations in kind of a rational, economic, analytic way, and that might help us get through some of the noise that's really hard to get through, especially if you think about something like a pandemic.
Yeah, I mean, I think, as I have been trying to do more sort of talking to a lay audience, both in the pandemic and even before, I really rely on data, and for me, sort of seeing things in the data is really useful, and it is like a key input to decision making. Although one of the things I've realized is that it can be very hard for people, say, who do not spend their whole childhood discussing data, to kind of put data in a way that is helpful for making decisions, as opposed to just being sort of numbers that come out at you. And I think that some of the challenge is really like, how do we put these numbers in a context where people can actually use them as opposed to just see them and kind of not quite understand how to fit them in their decision making. I think that's kind of the key of economics.
So talk to us about some of the examples, because you've really connected with a very, very broad audience, and an audience that normally would really shy away from thinking about things through this framework. So give us give us one of the good examples where people who aren't as schooled in this go, oh, okay, I got it.
I mean, I think that the biggest thing that people sort of is an aha moment for me when I try to explain risk to people is I talk about cars. So people are sort of have a lot of like, I don't want to take that risk. I don't want to take that risk. And sometimes I'll be like, well, do you ever get in a car? And then they're like, oh, I see. And I think that angle of sort of saying like, oh, actually, I am taking some of these risks. It must be that I am willing to adopt some risk. Let me now frame other things in that. I think that is often a moment of like, I see what you're saying.
Right, like you're doing it without even thinking it, right? Subconsciously.
Exactly.
Because listen, we are pelted with, these risk situations constantly through media and so on and so forth. So we know that they're out there, right? And so we just kind of make these decisions.
Yeah, and I think that there's a sort of salience to some risks. You hear about something, you hear about like it's something happening with an airplane, or and then people are afraid of flying. But the kind of back of that is like, well, that's still really rare. And just because you're thinking about it in the moment doesn't mean it should be more special data.
Hang on for a second. We got to do a little bit of news, Emily, and then we'll come back and continue, because we also want to get into why parents, especially amid the pandemic and trying to make decisions about sending kids to school, are really relying on your work, and why Reese Witherspoon reached out even or started following you. So we'll get into that in just a moment. We're going to continue with Emily Oster, professor of economics at Brown University. She's a Bloomberg Opinion columnist. She's an author. She really has become a go-to.
And there's a great profile we should point out.
It's
and one of the timely reasons to talk to her now is, as she mentioned at the top, Esme Deprez has a fantastic profile of Emily that really, I think, even crystallized for us even more why her voice is so important right now, and as an economist and as a parent in a pandemic. More ahead. Let's get to Nancy Lyons. She's in D.C. with some world national headlines. Hey, Nancy.
Hey, Jason. Hurricane Delta is now a Category 2 storm, weakening slightly as it aims for the Gulf Coast. Landfall is expected tonight. National Hurricane Center Director Ken Graham says this storm will likely bring flooding to the same area that was hit by Hurricane Laura in late August.
6 to 10 inches of rain. There could be some areas even up to 12 inches of rainfall, so that's dangerous.
When Delta does reach land, it'll be a record 10th named storm to hit the continental U.S. this year. The Supreme Court says it will continue to hear arguments by phone through at least December because of the coronavirus pandemic. The court's announcement means it is likely the big challenge to the Obama-era health care law will be heard by phone in November. The UN's World Food Program is the winner of the Nobel Peace Prize for its efforts to combat hunger in regions facing conflict and hardship as a result of the pandemic, which has driven millions more people to the brink of starvation. Executive Director David Beasley says he was surprised at the news.
This is the first time in my life I've been speechless. I mean, this is unbelievable. Talk about the most exciting point in time in your life is the Nobel Peace Prize.
The organization has long been headed by an American, and Beasley, a former Republican governor of South Carolina, was nominated for his position by President Trump in 2017. Well, the pandemic has prompted museums to close their doors, and the Association of Art Museum Directors says many are selling their prized works to survive, like Jackson Pollock's, Andy Warhol's, even a Picasso. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Can I just say, first of all, Nancy, thank you. I'm getting ready to do something for Milken, and it's about real estate. And I just think this is the one of the areas that everybody wants to know, like, how does it change? What happens next?
Totally.
Right?
We're obsessed with it, but
That's
we're
what I told
obsessed with
them.
it kind of by proxy. You know what I mean? Because, like,
What do you mean?
in the sense that, like, we know our listeners want to hear about it. We know they're talking about it just because we're talking about it in our daily lives. And, you know, this guy holds a special place in our sort of show heart because he was our last in-person guest in our studio, Kent Swig, and he caught up with our colleague Andrews Mellon recently, and his view of New York City, I think I would describe it as Massarian. It's very bullish.
Massarian. I like that. And he even tweeted out, I think, over the weekend that he was near our building at 7:31.
He took a little selfie.
It was very sweet, and he said he was thinking about us. Listen, absolutely. He is bullish on New York City. He's happy to be back in his office. And, you know, we had some real sobering conversations with him about, you know, especially just before, like you said, last interview back in March that we were in the studio, and he could see it coming and he could feel it. And you know, it was kind of a stark reality as buildings just started shutting down. So he says he's been in New York the past 6 months. He did move out to Eastern Long Island in March, but he's been commuting into New York as of Labor Day. And he says it feels good to be back. And, you know, his staff and he are back in the office.
Yeah, and he said the reason is because he feels like you're lacking efficiency and creativity when you're not together. And I think the efficiency question is the really tricky one because I think people feel productive, but maybe falsely.
Yeah, I don't know. I think on some instances you can be more productive because you're not interrupted constantly by kind of the activity around
like someone
you.
sitting next to you saying like, hey, look at this, look at this, look at this. Who would ever do that to you?
But at the same time, that interruption also creates, you know, some new programs, some innovation.
Sometimes
all
people
good
just
things.
stack books up so then you can't see them. I'm just saying. I've heard.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Final trading session of the week. Stocks higher across the board, on track for a winning week. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, working from home, Bill Maloney.
And good afternoon, Charlie. It's all about stimulus chatter today, with the Dow currently up 158 points. S&P's gained 28, NASDAQ climbs by 1.2%. The U.S. 10-year yield at 0.77%. Gold is trading higher by 32. Transports rise 87 points, and among the main 11 S&P sectors, leaders were consumer discretionary, tech, and consumer staples. Only utilities, real estate, and energy fell. Leaders to the upside in the Dow, Microsoft, Salesforce, and Disney, while IBM and Amgen led to the downside. Regarding that stimulus and other news, Trump says he wants more aid than either party is offering. And in deal news, AMD is said to be in talks to buy rival Xilinx in a $30 billion deal. Wrapping things up, Amazon's price target was raised to $4,000 over at Mizuho on the potential for a Q3 revenue beat. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And one additional headline to pass along to you. President Trump planning to host his first in-person event at the White House. That would be tomorrow, and that's according to ABC. And for live breaking news over your Bloomberg, type Squawk, SQUAWK, on your terminal. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Let's get back to our conversation with Emily Oster, professor of economics at Brown University, also a Bloomberg opinion columnist. She's on the phone from Providence, Rhode Island. So, Emily, let's get down to the brass tacks of parenting during this pandemic. It is brutal for a lot of people. I mean, I have teenagers and a 2.5-year-old, and I feel like I'm actually in pretty good shape because the older ones are self-sufficient and the 2.5-year-old's just adorable and, you know, kind of living her best life amid all of this. But I do feel like for people, especially with school-age kids, sort of elementary school kids who are also trying to work, this is really, really difficult.
Yeah, I mean, I think the spring was really hard, and then sort of going into the fall, I was talking to somebody the other day who was saying that her 6-year-old is expected to be on Zoom from 8:30 to 3:30 with a 30-minute break, doing, Zoom.
That's
first
insane.
grade. That's really tough. That's crazy. It's bad. It's hard for the kids, really hard for the parents.
So how do you?
What do we do?
Yeah, because I mean, this is like parents have been looking to you to for kind of guidance on this whole school thing.
Yeah, and I think that, it's sort of at some point I realized that it was very hard to give that guidance without data, and we didn't have good data. And so, one of the big pandemic projects I've been trying to do is to try to actually collect some data on schools. And Esme talked a little bit about that in the piece, but we've now got in some data. We're starting to, work with schools, try to collect COVID tracking data over time to really look at, what are the risks. And then I think even in the next few weeks, being able to look at, what are the kind of mitigation practices that schools are taking that are helping them keep cases down so we can help places reopen, because I think that is really got to be our goal, is to get especially younger kids back in school.
Well, what is the data showing when it comes to schools? And it's interesting. We were talking about real estate earlier, and it's always location, location, location. And I feel like even with the virus, to some extent, it's location, location, location. That every school system, every city, every town is not going to be. Every state is not going to be the same. But I'm curious what your data is showing when it comes to all of this.
Yeah, so I think our data in general is showing, fairly low rates. So we actually have, a bunch of geographic coverage, and for in-person school, we're seeing, over the last 2 weeks of September, in the average school of 1,000 kids, we're seeing about 1.5 cases. So, not no cases, but relatively low rates. And the rates are much lower in elementary than high school in the data that we're seeing so far. So it certainly seems like there's kind of a stronger argument maybe for bringing back younger kids than older kids.
Yeah. So, Emily, when you think about this from a broader perspective, a lot of it, we talk about this on this program all the time, this notion that kids being back at school is a critical part of the broader economic equation in terms of really getting the economy back to some sense of normalcy for, blue-collar workers, white-collar workers, for the whole workforce. How do you attack that problem, or how do you get your arms around this notion of measuring either the loss of productivity or whatever it is with kids being at home as it plays through the workforce and the broader employment picture?
Yeah, so I think there's sort of two things to say about that. So probably the most direct way to see those kind of impacts is to look at the labor force numbers, which I think came out last week, where you see basically huge drops in labor force participation. Like labor force participation overall was down about 1 million in prime age adults, and it's almost all of that is among women. So I think we're really seeing a lot of women leave the labor force, presumably because there are these additional caregiving obligations at home. But I also think we're framing this as somehow like it's the economy versus health, and we need to open schools for the economy and like let the health throw caution to the wind on health. But I actually think there's also real significant health issues: depression, anxiety, mental health, food insecurity. There are reasons that we want kids in school that have nothing to do with we got to get our economy going.
Right. There's also. You do wonder what happens to kids, right, developmentally, and education-wise for some of those critical years if they're not in school with peers.
No, and I think that there's learning losses, there's socio-emotional development losses, there's dropouts. I mean, I think we're going to see the impacts of this on kids, basically forever.
Yeah, and I know some of the positions you've taken haven't always been well received by lots of people. I know Esme gets into, what kind of pushback have you gotten?
So I think on the school stuff, the position that we need more data is something I think many people agree with. But I also I have taken the position that we should be reopening at least more than we have been, and I think there is pushback there. And I think sometimes you have to sort of think about, like, this argument is grounded in data, and we can have an argument on the merits. I think it's really important.
And Reese Witherspoon says she likes what you're doing. I'm convinced she's going to play you in a miniseries on Netflix. Can I just put that out there?
That would be amazing, but I doubt it. But no, I've gotten, the life is a little bit different in some of those dimensions than it was maybe 5 years ago.
Absolutely. Well, congratulations on all your work and success. It's really important, and
Thank you.
You are bringing a lot of really sort of grounded data analysis to the problem of our day, which is really, how do we get through this?
And she says, frame the question, mitigate risk, evaluate risk, and then make a decision. These are all the things that you need to come into thinking. So I'm so glad that we had got a nice chunk of time to talk with her. And check out, I put the story out on Twitter. It's at Bloomberg.com. So be sure to check that out. All right, coming up, Jason, it's Chart of the Day.
I know. I can't wait. I like some rush going into it. It's Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
I will never get over the monkey.
The monkeys? Oh, yeah.
But it's
Well, I was
like...
a little disappointed when you went to 287 in New Jersey earlier. You know, that's where the monkeys
Oh,
were.
that's where the monkeys were.
Yeah. I need
thought
you
maybe...
to write that down. Please remember that for me.
Okay, I'll put that in my
Never
things to
ask
remember.
about 287 in New Jersey without asking about the monkeys.
I'll have to remember that going forward. 287. Okay, coming up.
Chart of the day.
Yes.
Can't wait. Dave Wilson's going to be along in just a minute. But first, let's get back to Charlie Pellet. Hey, Charlie.
All right. I thank you very much, Jason Kelly. By the way, it's been wonderful working with you. We've got
You're the
the
best.
Dow, the S&P, and NASDAQ all pushing higher. 28 minutes to go ahead of that closing bell. Do want to begin with a headline from Bloomberg News. President Trump hosting a law and order event tomorrow at the White House. Also, J.P. Morgan Chase's Jamie Dimon, among the biggest Wall Street proponents of returning workers to the office, does not see life returning to some form of normal until the middle of next year at the earliest. His remarks coming at a conference hosted by an asset management industry group. Stocks are pushing higher with the Dow, the S&P, NASDAQ. They're all advancing right now. S&P 500 index gaining right now, up 28 points, up 0.8%. Stocks rallying on pace for the best weekly increase since July, as traders bet that lawmakers are moving closer to providing more fiscal stimulus. The Dow up 154 points, up 0.5. NASDAQ up 144, up by 1.3%. Well, one area under investigation in treating COVID cases is the role of nutrition. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health, and he was interviewed this morning on Bloomberg Television.
You know, a lot more factors play into it, but if we're going to focus on nutrition, you know, being fat in America is probably not a good thing these days when it comes to COVID-19 because of the more severe diseases that are there. The converse is true, too. Malnutrition, poor diets, those can make one more susceptible to infectious diseases, sometimes just in terms of being infectable, but sometimes in terms of disease severity instead.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. President Trump, meanwhile, going back to in-person events. The president credits an antibody treatment from Regeneron Pharmaceuticals for his quick recovery. Regeneron shares up now by 0.5%. Recapping equities higher with the S&P up 27, up 0.8%, 10-year yield 0.77%, gold up 1.8%, and crude at $40.51 a barrel, down 1.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Always love you. This is Bloomberg.
All I want is the truth. Just give me some truth. I've had enough of reading things by neurotic, psychotic, pig-headed politicians. All I want is the truth.
All right, Dave Wilson.
Wait.